Right. Hi, this is Sherry. I'm your host for today's Traders Exclusive Strategy Series live event. We're welcoming Rick Sadler, Toni Hansen, Melissa Armo, and Marina Villatoro. We're going to see, I took one bullet point from each of our speakers. We're going to spot big trends before they happen, how to trade patterns to keep your losses small and let your winners run, learn to decrease your stops and increase your profits, and the role of divergence. So please check out tradersexclusive.com, where we regularly post articles and video clips with valuable trading tips and techniques. This is also where you're going to find a recording of today's webinar. So if you have to leave early, don't worry, we do post the replay. Now, before we get started, I'd like to share the disclaimer. You should carefully consider whether trading is suitable for you in light of your circumstances, knowledge, and financial resources. You may lose all or more of your initial investment. Opinions, market data, and recommendations presented here are educational and they are subject to change at any time. Past performance is not necessarily indicative of future results. Please take notes, write your questions down, and let's encourage our speakers when they're asking for questions and engagement. Let's do it. So our first speaker is here. I'm so happy to welcome Rick Sadler of Hit and Run Candlesticks. He's going to be talking about trading in this volatile market. He's been trading and coaching traders for 30 years. Part of his goal in trading is to help others avoid the difficult lessons he's learned along the way. So he founded Hit and Run Candlesticks to show an example of how to grow a small account. In January 2018, he opened an account with $5,100 and since then has been able to grow the account 1,400%. Give us an update on that when you can, Rick. Now he's teaching others how to do the same. And all results are posted on his website. So he's going to be sharing that with you. And let me go over here and find Mr. Sadler. And there we go. Rick, you should be able to share your screen now. And let me know, do you like questions on the fly or do you like to hold them to the end?
Sherry, I love questions on the fly.
Awesome. Let me just make you.
That helps me. That helps me go to what people. Yeah, I love that. So please, anybody,
Awesome.
you have questions? There we go. I just clicked on my monitor.
Good deal.
You should see
awesome.
Chart. We're working there.
Yep. Candle, cool. T-line, good job. I'm going to mute myself and take it away. And thanks for being with us.
Hey, thank you. Seriously, thank you. This might be the, I don't know, fourth, fifth, maybe sixth time that I've been invited back by Traders Exclusive, and I'm honored. I'm always, you know, the first time somebody invites me, I'm surprised. After that, I'm just extremely honored that you would have me back. So thank you. Thank you. Over the last few days, I've been kind of thinking about today, and I've looked at the speakers there, and I got to tell you, I'm in a great group. So thank you for putting me in such a great group of the four speakers today. Three, and then I'm the fourth. Really honored to be in that group. So appreciate it.
Well, I appreciate you being here.
Thanks. Okay, folks, ladies and gentlemen, again, I don't know if I can see your questions. I'm not sure how to figure that out, but I can expand that box maybe. There we go. Okay, maybe I can see them now. So if you do have questions, please, please, please feel free to ask, okay? And what I want to start with the market is I know a lot of people, and over the past, I'd say 10, 15 days or so, there's been one day that I have not physically spoken with somebody about their trading and their troubles that they're having right now. And you know, we start drilling down to what they're doing and why they're not getting the results and why they're not getting the win rate that they should be getting. And it's boiling down to one thing most of all, and that is trying to pick a bottom, trying to catch that bottom. You know, I've been one that's really been here in our trading room and with our group of traders. I've been talking a lot about this bullish piercing candle, and this could absolutely be the bottom, but could is not fact. Um, it's just not fact at all. So I've been very careful with entering long trades at all. In fact, the short trades have been what has been paying most of all. The problem with the short trades is we just don't have that breakdown below that bullish piercing candle there. So the folks that's been trying to catch a bottom, um, maybe I've seen folks try to catch this. Folks in here tried to catch this right here, and then they just totally lost ground. Everything they touch just turns to garbage, and the frustration is setting in. Let me please share how to solve this problem. It is really a piece of cake, and I can talk to 1,000 traders, and 1,000 traders will agree with me. But 995 of them, you know what they're going to do? They're going to go against what they just said they agree, and they're going to pick a bottom. And it's that fear of missing out. If you are listening to me, then you're a swing trader. I have a long-term account, but I never talk about long-term trades. I'm not into long-term trading. I'm into swing trading. I'm into buying a chart. I trade directional options, long calls, long puts, and I look for chart patterns, chart setups, and I'm after those swings. I'm perfectly happy if I'm going to be in a chart. I'm perfectly happy with a 25, 30% profit. I'm absolutely ecstatic about that. Of course, I'm happier with more, but that's my sweet spot right in there. So it's just a little bit about me. Now, let me share with you how to stop the frustration. And then we're going to talk a little bit about, I noticed that Sherry there had the 3/8 trap on the screen a little bit. So I would like to talk about that a little bit. But let's first solve the problem of the frustration because maybe what used to be a 70% win rate has gone down to 40%. And here's why. Because you're trying to pick that bottom, and you're trying to get into a swing trade that's not trending. Swing trading is about taking a chart that's in a swing or in a trend like this right here. And then swing trading is we want to see that chart rally, and then we want to see the pullback to trend, to support, and then we want to see those buyers get in. And that's where we want to get in. Now, another place that we might want to get in is the breakout. So we might want to get in right here. Really what we're doing, you see that little arrow right there? We want that swing. We want this swing, this swing, this swing, this swing. That swings like that. And these swings you can put together, stock charts. You can see anywhere from 5 to 20% moves. The 20%ers are going to be a little tougher to get just because of the movement here, because a lot of times they don't go up 20% before they start to retrace down. If you're looking at directional options, then it's pretty easy to put together 10, 15, 20, 25, 30% swings looking at that swing trading. The problem again is trying to put together a trade when we're in a downtrend, and really you want that uptrend. So how to get away from that? Just stop doing it. Just simply stop. I know that sounds so easy, and there's probably people out there that listening in right now or on the future recording saying, yeah, I agree. But when it really comes down to it, what happens is you get wrapped up in this fear of missing out. And we all do that. All traders do that. The successful traders realize that early on, and then they say, wait, hey, let's pump the brakes for a second. Let's pump the brakes. Is that really the chart I want to trade? Let's go to a chart that might be setting up. Look at BE here. This might be setting up. Not really, not till it gets up here, but we'll look at this one. We can certainly look at that level or this level in here maybe. We've started to trend. So I know it's easier said than done to just stop trading. But how many people, and feel free to answer if you like, but how many people have fallen into this category, has seen this happen? You've made money this week. You've even made money this week and this week, and you've lost some. I mean, there's, we all have losses, all right? So don't think that every trade is a winning trade. But overall, by the end of the week, Monday through Friday, you've actually done pretty good. You tally up your losses, and there's losses in there. You tally up your losses, you tally up your winners. It's all right. This is great. This really is. And then what happens? The market runs into troubles, whatever the troubles may be. It runs into troubles, maybe resistance or just troubles. Okay. And you don't change your game quick enough. And what happens is, because you're out there still pumping the trade, still rocking it, I mean, hey, you can do no wrong, right? Well, the market may be not working in your favor. So what do? You give up a week's worth of earnings. Overall, that might not be too bad. But then what happens is you do it another week, and then maybe another week. And you're still out there pushing the trades because you've done so good here that you're kind of blinded by what's going on. Everything I've been doing is working. I love what we call the 3/8 trap. That's my, I love it. Okay, and we're certainly going to look at that a little bit today. We'll do that. I love that setup. But that setup works best when the overall market is trending. Think of the market as the SPY. The SPY is what I use for my market. Qs would be number 2. Think of it as right now as an 800-pound gorilla, and you're trying to push a long trade up. And I don't care what strategy you're using. I don't care what kind of indicators you use. It doesn't matter. When you have an 800-pound gorilla sitting on you, it takes your wind away. So sure, you may get a little bit of a pump to the upside on this stock. You might even make a little bit. You might eat like a bird. But when it comes down to it, if you look at your week's trades, you're going to poop like an elephant. And what's going to happen is you've just gone all these weeks for nothing, for absolutely nothing. You don't even have your winnings here. So here's the thing to do. Just stop trading. But we run into a problem there. I pay for a membership. I have 6 monitors. I have a brokerage account. I pay for this software, that software. My monthly cost might be $200. So what do? You wake up every morning and you think, by golly, I'm going to cover my $200. Yeah, well, how's that been working out for you? What I'm trying to say here is just stop trading when all the conditions are not met. One of the conditions I have for trading, and it doesn't mean that I don't trade, but what it does mean is I lower my position size and I limit the number of positions. I trade very cautiously if I'm concerned about the market. The market right now in no way, shape, or form is trending. Absolutely not trending. And that's what we need to see for those long swing trades to work. Even the short swing trades, we really need to get below this 410.80 on the SPY here. Right now, this candle is holding us up. We are pivoting on that candle right now. Now, I cannot guarantee whether we're going to fly up or we're going to drop dead and fall through the bottom. So what happens is that makes this whole area right here very troublesome, very hard to trade. And I think if everybody listening in, if you go back to your trades and you take a look, the majority of you will agree with this. You can see where maybe you went wrong on trade XYZ. So just think about that. Maybe just stop trading until the market straightens itself out. Right now, for me, straightening itself out would be probably a breakout of this high right there. That high, because then what that would do, you've got a low, high, higher low. That would give you a higher high, and that would be the tradable bottom. On the bearish side, we're down, we're up, we're down. Here we are kind of bouncing around. If we move back below that 410.80 area, that's tradable to the downside. So there are times in the market when you just say, I'm out. Just tap out for a little while. Tap out for a few days. Tap out for a week. Go on vacation. Play with your grandkids or your kids or whatever. Okay. All right. So enough of that. Sherry asked about my trading account. We call that the Road to Wealth account. And yeah, I grew it pretty good. The market was good. You know, the conditions were right. I kind of quit doing it for a while, and I just recently started it back up. This time, I didn't start it with $5,100. I started it with 25,000. Okay, 25,000. So I'm starting with that, and my goal for 12 months is to double it, make $50,000. That's my goal right there. One of the things that we focus on is trading for your goals. So if I'm in a swing trade, let's take this TGNA. You can clearly see that we're in a nice trend here. Our trend indicator, that's the green dots and red dots. Our trend indicator is telling us that it's bullish in the trend based on the trend indicator. This is a 3/8 trap. A 3/8 trap is when price is above the T line or the 8 exponential moving average and below the 3 exponential moving average. And that's the green line right here. That's 3/8 trap. So I forgot where I was going with this, to tell you the truth. This is the type of trade we look for. Let me go back to the trading account. I know what I was going to say. So this is typically the type of trade I would take, or a 3/8 trap breakout. Then what I'm going to do is let's talk about the goals. The goals in the for the Road to Wealth account. Here's the goals I use. So let's just say that you start with $25,000. Okay, and you can start with any amount you want. I did it with $5,100, and it reached like the high 89s, just under $90,000 in just 2 years or 2.5 years, maybe something like that. And so here's what I did, and here's exactly what I'm going to be doing right now to increase this to 50%. By the way, when I take it to, or by 100%, when I take it to $50,000, guess what I'm going to do? I'm going to double that to 100,000. That's my goal. Probably should do this. Okay. So that's my goal. Can't guarantee it's going to happen, but you have to have something to shoot for, right? So here's what I'm going to do. If you have a $25,000 account, what is your annual goal? Your annual goal is $25,000. That's easy. So what is your monthly goal? Well, your monthly goal is going to be about $2,100. Okay, monthly goal. Your weekly goal is going to be somewhere in the neighborhood of $540. Okay, Your daily goal, oops, put that in the wrong place. There we go. Your daily goal is going to be somewhere in the neighborhood of 110. All right, real simple. Now, you don't always make your daily goal. In other words, you may have positions on and they certainly may be growing, but you might not close a position out every single day. That's okay. At the end of the week, you want to make sure that you've increased your account by $540. Now that's really small. Most people think they've got to go out there and hit some kind of a home run. You don't have to hit a home run. You have to do base hits. These are base hits. So a little base hit here. So you make that green. A little base hit here, a base hit here. It's these base hits right here that equal the monthly base hit. The monthly base hit will get you to your $25,000. So when I'm looking at a chart, let's see if I can find another one. Well, let's see what this one looks like. Here's Mercy, MRCY. This is not quite a 3/8 strap, but it's coming up on a 3/8 strap. So if we do get, say, something like this, I see a possible buy coming, but I'm not interested in buying it right here. And for everyone that watches a future video, this is March 16, 2022, and we all know that Mr. Powell is coming on here pretty quick to announce a rate hike. So being very cautious in the market right now. So if this does happen, if the market likes what comes out here at 2 p.m. Eastern time, then I can see myself possibly buying this. What I'm going to do, let me take this off. If you look at this, right there might be a swing target. Let's move this down. Let's move it down a little bit. That would be a fair swing target. And here it's about, we'll call it 8.5%, because I'm not going to buy it here. I'll buy it up a little higher. So we'll call it 8.5%. Well, like I mentioned before, I'm looking at buying directional options. And I don't know if this has got good options to actually do it. I'm just looking at my scanner and it's showing up on the scanner. So I'm looking at 15 to 20% profit on this, not just under 9% or 8.5%, looking for 15, 20% profit. And that's just what the directional options will do for you. So if you think about it that way, as base hits, this here would just be a base hit. You add those daily base hit up to a weekly base hit, to a monthly base hit, and before you know it, in a year's time, you've doubled your money. Most people, most traders, that when I do coaching and I ask them, what are your goals? You know what they will say? They would be tickled pink to make 10% on their money. 10%. You can do the math for just 10%. Based on $25,000, if you did the math on 20%, I'm just going on a limb here, going to guess, you probably have to do about $30 a day average profit. That's all. Well, I think we can do better than that. So let's shoot for doubling our money, and let's make adjustments along the way. But let's reach for the stars a little bit. The key is those quality charts. That's the key. Getting into those charts that make sense. Getting into those charts that look kind of good. This was one of our trade ideas that we posted out today to members, Hertz. And a lot of people have asked me, well, have I missed this trade? Well, two things come to mind on that. One, the answer is no, because we're going to look to trade it. The new bottom will be right there. That's the new bottom. We have a, make this blue here. We have a rally. I'm going to say a rally to right here. And then what we have is rest. Rest starts the process all over again. This is what a bullish chart looks like. This would be it right here. low to a high to a higher low. There's your bullish chart. And this will stay in a bullish trend until it's no longer in a bullish trend. Now remember, if you're trading for base hits, all this thing needs to do is go up how much? Well, let's just come over here. What if it went up just to this area right here, say 25 bucks. And I'm just taking these tops, little resistance. That's all I'm taking. That's it. And at 12%, that's not a bad stock trade. Not bad at all. My stop would be around that 22.15 mark, 22.10 mark. If you're drinking a directional option trade, that's 25, 30% on the trade. Remember, you're only after base hits. Remember, if you had a $25,000 account, you only need $110 a day average, and what was it, $540 a week average. And that includes losses. So these are net numbers. And then that adds to your monthly adds to your annual, which is your true goal. Your goal is not only the daily. Your goal is not to think of just a daily. How much money am I going to make today? The goal should be, well, how much money am I going to make this week, this month, this year? Trading is about being a turtle, slow and steady, not a rabbit. Not a rabbit. Rabbits get excited and die. You know, turtles live long. Be a turtle in trading. So here's another thing I want to mention about a chart like this. I'm very vocal and big on a watch list. I think a watch list is an absolute must. And when I see a chart like this, most people, what they will do is they will look at that chart and it's like, oh shucks, I missed the trade. I'm totally opposite of that. That's the trade I want. That's the trade I want. And here's why. You make money in swing trading with a trend. That's how you make money in swing trading. I'm going to draw that line up there like that. I use the trend indicator a lot for a trend. I'm not going to go really deep into that. For me to put a line on this low and this low makes actually very little sense to me the way I trade like that. What does make sense to me is follow my trend indicator, and this is what I'm doing right here. By the way, the trend indicator, if you have, you can set this up with any program you have, any charting program, it doesn't matter. I use TC2000 if anybody's interested, but any program can do that. So this is the chart I want. Why is that? Remember how trends work, okay? Trends will go right to the top here. What I'm going to do now is wait for that rest. And that's where we want to look for buying, or maybe the breakout. And then what's going to happen? We're going to get that next bullish move. And if it's not a bullish move, the candlesticks will tell us. That's what we have stops for. We can't be right on 100% of our trades, not at all. No one is. But that next move, and then if we're in that move, we're going to make money. We're going to close it because we're after base hits. Pulls back, and then what I'm going to do is look for those buyers to step in. See, it's coming back to trend. We'll look for those buyers, step in, and then we're going to take advantage of that swing. Trying to do swing trading right here, just stop trading now. You're going to lose your money. Okay, just stop trading. Save yourself tons of aggravation and tons of money. Just don't trade anymore. You'll be much better ahead. Take a look at CLR. This is approaching that 3/8 type trap area here, approaching that. And I'll be watching for this. This is coming off the 50 period moving average. So I'm going to be looking for an entry in this area here. I also like a 3/8 strap breakout, and that's what this is going to end up being. I absolutely recognize it needs to get above $59. I'm not worried about that. I may not even enter it till it moves up into this area. If I enter it, I'm just trying to point out a trending chart with that 3/8 trap. I want to make sure one thing here. Yeah, okay. That's all I'm trying to do here. So anyway, I hope that was kind of helpful. With that, here's a nice 3/8 trap. There we go. There's one I'm looking for. To be honest, if we didn't have those the Fed minutes coming out here this afternoon, this is a chart I think I could absolutely be buying into. Absolutely be buying into. It meets my criteria. The only criteria it does not meet, okay, the only criteria it does not meet is the SPY is not in a bullish trend. So after kind of listening to what I just said, I may not be able to enter that trade because the SPY is not doing what I want. SPY is not doing what I want. So, but if it wasn't for the SPY, then this would be one of those setups. Here we have a rally to the upside. Let me draw this out. We have a rally to the upside coming off a nice bullish engulf off the 200 period moving average. You can see the trend indicator is trending green, and we have a pullback. We have a bullish Hiromi. We have a 3/8 trap. What's not to like about that chart? Other than you got those Fed minutes coming out. And the market might not like those Fed minutes, and that's what I'm concerned with. So this is a typical trade right here. I call this, it's kind of funny actually, and I do this sometimes just to bring attention to my charts. This is a scan that I use, and notice the name of it, the best scan in the world. The best scan in the world. What makes it good? What makes it good is let's see, is that the one I want to bring out? Or maybe I want to bring this other one out. No. Oh, let's bring this one out. This is the same scan, just a different little twist to it. And this will actually work better for me, I think. So I'm going to make a couple adjustments. We have time in here. Yeah, we have time. I just want to peek at this. That's on the 15-minute. Okay, cool. So we're going to let that kind of perk here. Well, one's coming up. Look at Jack Henry here. See, Jack Henry, the best scan in the world. And I'm going to share with you two things in this scan. I can share it all if we have time. There's no secret here. One is the trend right there. Another thing is going to be the fact that we've rallied up and pulled back here. Rallied up, pulled back. We're in a 3/8 trap. That's what I'm looking for. That's the chart setup. The one thing that's not there is the market is trending, right? Well, notice on this, there's 122 possible stocks, okay? 122 possible stocks. Let's go look at the SPY really quick. Actually, that is going to alert, isn't it? All right, let's do this. This is going to alert, but what I'm going to do is look at it weekly, and you'll see what I'm trying to share here. So I have it set up right now so that the SPY triggers actually on a 15-minute chart, and you can see where the 15 minutes started giving us a thumbs up that the market is trending only based on a 15-minute. Okay, so you can see that there. Now, what I'm going to do here is I'm going to change this to right here. I'm going to change this to a month weekly. And what I'm trying to show here is if the market is not set up for you, don't trade. Trade only when your conditions are correct. And you don't need very much. You really, really don't. But one of the most important things I think you need is the market to be in your direction. You would, if you're out there sailing, you would rather have the wind pushing your sails. You don't want an 800-pound gorilla in your sailboat. The market is an 800-pound gorilla. Right now, it is an 800-pound gorilla. And it's killing you if you're trying to go long at the moment. And truthfully, for a lot of people, it's killing you trying to go short because we're in nothing but chop right now. Okay. So we're at zero, right? That means your conditions have not been met to trade. This is like a keep it simple, stupid kind of a trade here. It really, really is. You want to bump your win rate. Trade when your conditions are all set up. Trade in a, I like the 3/8 trap. Doesn't mean it's the best strategy in the world. Doesn't mean that at all. It is for me, but maybe not for somebody else. So the thing to do is whatever your strategy is, all bullish charts are going to do this right here. All bullish charts trending are going to do this. 100% of them. Okay, not 99%, not 2%, 100%. They're going to rise, they're going to rest, they're going to rise, they're going to rest. It's like clockwork. It's like breathing. It's like breathing. So let's take this off that weekly, and we're going to turn this on. Whoops, we're going to turn this on to the daily, back to the daily, right there. And notice we have 118 possibilities that we could trade. Now, this is not going to trigger until something makes a new day high. That's the way I have this set up. So it has to trigger a new day high. We'll give it a minute here. Any questions? I forgot to check what time we started there, Sherry, so I'm not sure what time we started, but I sure would like any questions about this. Somebody's asking a trap. The trap is really simple. It's taking two moving averages and trapping price between them. If you ever hear me refer to the word, this is setting up as a trap, I guarantee you I'll always be referring to the 3/8 trap. I have several other traps, different moving averages, okay? Let's go look at AES here. Look at AES, right? Let me blow this up. So let's look at where the 3/8 trap is. This is a 3/8 trap. This would be a 3/8 trap before it broke out. This is a 3/8 trap, except it lost everything when it closed below the T line. This is a 3/8 trap. This started as a 3/8 trap and broke out. That's a 3/8 trap. That's a 3/8 trap. 3/8 trap is when price is trapped between two moving averages. Correct. Somebody asked, is it the 3 EMA? It is the 3 EMA, but thanks for reminding me. I use a 3 EMA high. Well, watch that green line right here. Watch that green line right here. I'm going to go to last price, okay, or closing price at this moment. See how it pushed that 3 down? I don't want it to do that. I want to do the high. And what I'm doing is I'm throwing a bigger net out there to catch the fish, because I can clearly see the setup. Now I'm going to use my knowledge to decide whether I want to buy that chart. All the 3/8 trap does is it puts it into an area that I'm willing to consider a buy. Now I want to go evaluate that chart. MATX showed up here. Look at that 3/8 trap. Look at that trend. Like I said, the best scan in the world. Okay, it is the best scan in the world, and I don't mean it that it is literally the best scan in the world. I'm sure somebody has other ways to find charts that are just as good. What makes it the best scan is it's idiot proof. It's idiot proof in the sense that why would you want to trade this chart if the market is pointing down? I'll tell you why. Because of greed, because of fear of missing out, because you have two monitors, because you have a trading account, because you pay for a service somewhere or you pay something, and by golly, you're going to make some money. And that is a horrible reason to trade. All of those reasons right there are a horrible reason to trade. Absolutely horrible. Just stop doing it. Donate your money. At least you'll feel good about it. Maybe you get a tax write-off. Okay. Otherwise, trade smart. Trade sensible. Trade with the trend. The market needs to be in that trend as well. Okay. Let's look at this CPSI. Look at that. I mean, wow. I love that chart. So we've got a 3/8 strap. This would have been a 3/8 strap till it broke out. That's a 3/8 strap right there. That's a 3/8 strap. Anything between that red and black, green and black line would be considered a 3/8 strap right in there. Let's look at NEP. NEP, that's a 3/8 strap. You gonna buy that candle? I would never buy that candle, but some people do. But that's 3/8 strap right there. Where is the buy on a 3/8 strap? Okay, great question. Great question. All right, I love this question. And now I'm going to share something with you that I don't know whether you're going to particularly like or not like. I'm going to stick with this one right here. So where is the buy? We can all agree on this chart, say from here back, okay? We can all agree on that chart. We can all agree that the trend is there based on the green dots. I mean, this is fact, okay? That we're not making this stuff up. This is fact based on the green dots. It's trending up. Fact, it's above the T line moving up. That's a fact. It's not hocus pocus. It's not I want it to be. It's not almost. It's fact. This is something everybody can agree upon. Now, here's the problem with an entry. An entry is an entry is not about it's not about getting here. I probably should draw a line like this in here. An entry is not about getting $33.67. An entry is not about getting that low at $33.26. An entry is also extremely private. Okay, it's very emotional. An entry it's not secretive. Let's not confuse those two. It's not secretive. I'll be glad to share, but it's private. In other words, what is Rick willing to do for risk? Well, I don't know who this is, so I'll just say Ted, okay? There it is there. Anyway, let's just say Ted, okay? So Ted and Rick might totally disagree on the entry, but we can agree that that's a great looking chart. Ted might say, I'm not interested in buying this till it breaks above 35.19. Rick might say, I'm buying it right now. An entry is extremely private, not secretive, okay? Just private. Now, let me share with you what I will do. Because I like the chart, because we're above the T line, where would I not like the chart? Below the T line, right? Problem solved. Risk has been cut down to almost nothing. Problem solved. So I like this as a buy right now. Now, one of my other favorite trades is a 3/8 strap breakout. A breakout is a breakout of that green line, the 3. So I will also buy that. Now, when I look at a trade, something I'm going to do is I'm going to say, well, can I make money on this trade? Can I? So let me move this over, way over here. There we go. That'll work. So if I was to buy this say right now, I'm going to run into resistance here at 4.46% away. Is that the trade that I want to take? Maybe not. Okay. maybe not. My entry, however, will be in this area, and it will not matter to me whether I pay through the $33.54 or if I pay $34.05. Trading is not about your entry. Trading is about what the stock can do for you 3, 4, 5, 10, 20 days down the road. It's not the entry. This is where a lot of traders get a little confused. And if their trade doesn't automatically go up, if their trade sits here and bebops around for a few days, they start freaking out and panicking. When the reality is there we go. The reality is it's still maybe above your stop. So I'm willing to hold it as long as it takes, as long as it does not break down through my stop, if I like the chart. Okay. Here's that EOLS we looked at a little while ago. It's starting to move up. Where would I buy this? Right now. But here's why I won't. Okay. In about an hour and in about 15 minutes or so, the whole Fed announcement is going to be out. I don't want to participate in this market when we're doing that. I mean, seriously, look, here's something to the members in the trading room, okay? Here's something I showed them yesterday. I think I did it this morning too. Say you're in 6 positions, okay? Whoops. Say you're in 6 positions. You're in 6 positions, okay? The whole Fed announcement comes out and it's bullish. The market takes it as bullish. Well, if these represent shorts and if these represent longs, and if the market turns out bullish, your shorts are probably going to hurt you. You know what? That's on you. That's your fault. Own up to it. Why in the heck do you want to trade through something so unpredictable? And if you think it's predictable, then go ahead, go out there, get into trades. If whatever the Fed does or says, and if the market takes it bearish and we start down, if you're in long trades, you're probably going to get punished. You're going to get punished. That's on you. Own it. Trade smart. Trade smart, okay? That's the key to trading. Be a turtle, be smart, live long, not a rabbit. Rabbits, you know what rabbits do, and they die. You know, everybody knows what rabbits do, and then they die. Don't do that. Be a turtle. Take your time. Slow down. Make sure everything is lined up for you the way it should be lined up. Man, we're coming up with a lot of charts here I don't really like. I don't like those. See if I can find a couple here. Here's one somebody might be interested in. I wouldn't be interested in this until it actually broke out. Yeah, there we go. So here's some recent highs up here. I'm actually going to move this down just a little bit. And then how much can we make on this chart? Let's go look. Would anybody be happy with 13.5%? I could be. You're a swing trader. Like I say, if you're a long-term trader, you're in the wrong webinar here with me. If I could buy this in this area right here, I could be happy with 13% on the stock, 30, 40% on the option. I can be ecstatic. What am I going to wait for? The exact same thing I always wait for it to rally up and pull back into a 3/8 trap. Yes, when it moves up here, this is something too some traders fail to understand, that here's the 3/8 trap right here, okay? Right there. When this stock moves up here and it rests and pull back, you'll also have a 3/8 trap up here. So you don't have to miss anything. Anyway, I think I hear Sherry coming on. She's about to boot me off.
I am. I hate to do it, but I have to do it.
She's about to boot me off, everybody. No, it's okay. I knew that. So,
do you have a link for everybody? Do you have a link, and how do you want them to get in touch with you and all that good stuff? Because I see more questions coming in. Guys, you're going to
Yeah.
have to ask him directly.
Well, I'm trying to find a link here. Here, let me give you this right here. Let me see if I figure out how to post this out there.
Let me see.
Let's see. Send to all. Where do I post it at? Huh. Trying to figure out where to post it.
If you go to your chat.
Yeah.
And you pick to a whole audience.
Whole audience. Send to all audience.
All entire audience. Yep.
It's
Oh,
not. It's kind of.
you're working through the questions. If you go to the main panel and you go to chat, you can go down there. It's like it's under
Chat.
handouts.
I
Yeah.
think I found it.
Chat's different than questions. I don't know
There
why.
we go. There we go. I just posted it out there.
Good deal. Good deal.
But
Okay, folks.
that'll take you to a page where you can register for my Monday webinars. I do a Monday live webinar every Monday morning. Well, before noon anyway. And you're more than welcome to come to that. Send me an email, rick@ricksadler.com. I'll be glad to answer. The $49, it's a 30-day trial for $49. I think it's absolutely worth it. So if you can get in a trading room, I go over all this stuff during the day, 100 times a day sometimes. So anyway,
let me put that out to the whole
I hope
audience.
I see a few people
there
here.
we go. There it is. Okay. Well, I really appreciate you being with us, and I know I'll invite you back again. So we'll probably see you in another 6 months.
Don't make it so long. Don't make it so long.
Okay.
No,
All
thank
right.
you, Sherry.
All right. Have a good
Good luck,
day.
everybody.
Thanks so much.
We'll see you later. Take care.
Bye now.
Bye.
All right. Oh, let me change presenters. All right. I know our next presenter is here. She came on early and checked in, and she is oh, I need to remind you that if you have to leave early, we do have a recording. We are recording this, and we post it at our tradersexclusive.com/archived_webinars. And you'll find all kinds of good information on tradersexclusive.com. Not going to take up any more time with that. I want to welcome Toni Hansen of Trading from Main Street. She's going to be talking to us about understanding price action at its purest. And Toni is one of the most respected technical analysts and traders in the industry. She's got a high reputation for accuracy in both bull and bear markets. Her style of trading and market analysis transcends both time and market vehicles, making it attractive to investors and traders of stocks, futures, options, ETFs, commodities, and Forex. She's a popular columnist on TheStreet.com's Real Money Pro and Alan Farley's The Hard Right Edge. And she is the author of 4 books, including the award-winning Simple Steps to Trading Discipline. Thank you for joining us today, Toni. It's great to have you back again. There we go. Sorry about that. I don't know why you were muted by me. I would never do such a thing.
That's okay. I'll forgive you this time. Let's see here. So I can, let's see, got me switched over to presenter. Hold on, let me. And let's
there you
see.
go.
Which screen do you guys see? Do you see the
Toni Hansen, price action at its purest?
All right, perfect. That's exactly
good.
the one we want. And I'm going to open up my questions box so I can see you all when you bring in the questions. Hey, Michael.
And you know what I do? I usually will sort it so that the most recent question is at the top.
Oh, that's a good plan there. Okay.
So that just makes it a little easier. There you go. I'm going to mute myself now and you take it away. And thanks again for joining
All
us.
right, thank you. All right, thank you everyone for joining me here today. So we're going to talk about pure price action. And let me dive on in. So what is pure price action? What do you guys think of when you hear the term pure price action? No indicators? That's one part of it. What else? Well, let me show you what our charts tend to look like. So here is a chart of the Nasdaq. This is the NQ futures. We're on a 1,000-tick chart. And this is a line chart. So this is one of the main charts that I use in my trading. And a number of traders will also use candlestick charts. So here is the ES. This is your 10,000 tick chart. And it is just the pure price action showing the candlestick charts. Now, I love to use both of these. So I don't really just rely upon one or the other. I don't rely upon just line charts or just our candlestick charts. What I like to see is the pure action where we can get the wave development shown really clearly. Now, an advantage of a line chart is that we have pretty smooth movements, and it can be really easy to see the core movement that is happening versus when we go over to tick charts, or candlestick charts rather, what can happen is, when we get into these zones of congestion, it can be a little bit more difficult to see what that absolute momentum is going back and forth within those trading ranges. So I like to use a combination of both just to allow me to see what's going on with our pure price action. So what I'm going to show you today is I'm going to be looking at 4 of my building blocks of price development. And these are the key traits that I look for in every single strategy that are going to give me a heads up for what can happen next in the market. And I'm going to bring in a couple of the trades that I took this morning as well, so that you can see what this looks like in real time. And I did not use a single indicator when trading this morning. I didn't use Fibonacci, I didn't use volume, I didn't use stochastics or moving averages or any of that fun stuff. And yet, the plays were timed perfectly and moved incredibly well to their target levels, based purely upon that price action. So let's begin here. The first thing that we need to know are, what are the 4 building blocks? The first one is trend placement. So trend placement means, where is a strategy taking place in a larger trend? And for our purposes today, the main thing that we're going to look at are the impulse waves. So an impulse wave is just a major trend move where the overall momentum is very strong. You want average to stronger than average momentum. And what you're going to be looking at is, where does that impulse move begin and where does it end? Same thing again, beginning, end, beginning, end, beginning. This is our main part of it. And then we get a little bit of a shift there. Another move here, a little bit stronger here, and then here. So when we're looking at these impulse moves, what we want to look at is, what is the average impulse move? So if we have a move from here to here, when you're on your charts, you can go and grab that line and place it and hook it up to your level over here. And take this one, do kind of the same thing, starting at where the bottom of this is, and then that's going to give you a level on the upside. Start on the bottom again, level on the upside. What you're going to see is that you're going to have a number of impulse moves that are going to be very similar in terms of the size of those moves. And some of them you might find are a little bit bigger. So for example, if we went all the way here to there, that would also be similar to the one on the way back down. And what that does is it helps us identify main zones where if we're in a position, that's the level that we want to look at to begin to protect our profits and look for smaller time frame reversal strategies or indicators that that trend is ending, but dropping down into those smaller time frames. And so that can help us really nail down our target levels in the market. And what's more, it can also help give us a zone where we can begin to look for reversal patterns. So if we have a move like you see right here in the middle, where it's a strong, nice two-wave move here, and then it begins to shift, this tells us that we're coming into a zone where we can have a really nice reversal pattern begin to unfold, because it brings into it a second trait of price development, and that is momentum. So when we're looking at momentum, you got a really good view of it right now, given what's going on here. Coming out of our Fed, let me pull that chart up so you can see. We have this beautiful impulse move here. So each of these waves back and forth are called impulse waves. And when we're looking at them on any time frame, let me open up this ES chart here so you can see this a little bit bigger. So here's our ES. Just clear that off there. And in here, what we want to do is when we're looking at impulse moves, we would want to look at moves like this. So some of these bigger impulse moves like this, and then also some of the smaller ones too. So when you get smaller impulse moves as well, I'll usually put those a different color so that they can stand out a little bit differently. So you have the smaller ones as well. And what that can do is it can give you, again, another good idea for where those target levels can come into play. Now, on this bigger time frame here, this 4,000 tick chart, the move from this low to this high is also an impulse move. So if we're looking at like a swing trading strategy, something that's happening on a larger time frame, we don't have any other comparison impulse moves that are this size. So what we would have to do is we would need to go up to a larger time frame. So that's a 4,000 tick. If we come up here and we look at a 40,000 tick chart, here we're starting to get some more examples coming into play. We've got the drop over here, the rally here, the drop here. Then we've got a little bit of a smaller one here, which is similar to the continuation move here as well. So this gives us a couple of other examples. I would want to see a few more examples though, to find out what that medium movement size is going to be. So if we go up to the 80,000 tick chart, this is going to give us a lot more. Let me clear this. And erase those. And so now we can have a better comparison of what this impulse move looks like, comparing it to a lot of other previous moves. So we'll have some of the larger moves, and then we'll get some of these smaller moves. The larger one, and then these smaller moves. So what we're looking at is if we take like this move here, we go from that low We go up to that being a measured move. We take this one, we do the same thing. I'm just kind of eyeballing it for our size. We take this one, we do the same thing. Then that tells us that this zone right here is going to be a really good zone for potential reversal strategies. Now, if you have a lot of smaller time frame moves where we have, for example, the movement like this, if we take that and we put it on, actually, let me clear it. I'm going to get rid of those other ones so that you can see these a little bit better. So here is this first kind of counter trend move. So if we put that on, we're looking at, you know, right about here. First counter trend move over here is about this size. If we use both of those waves, we're right about here. So this is going to be the smaller portion. This will be your larger portion in there. Smaller one again here, there. And then you can do that for all of these back and forth moves. And they're going to give you a lot of different sizes, but you'll start to see zones where most of the sizes begin to kind of converge, where you're going to find that median zone of where those impulse moves are. Now, what's really important is you look at movements that take that same momentum as the current move you're examining. So you don't want to take something like, say, here, where momentum has shifted, and compare that, because that's not going to give us a good outlook for what that's going to do. We want to compare moves that have similar momentum to give us a good idea for the levels that those can reach. So this is one of the first things that I'll do when I'm looking at a security. Another part of trends development is looking at wave counting. We don't really have time to get into those details. There's a lot of advanced ways to look at the wave development in a trend, which can be another aspect of helping identify when that trend is coming to an end versus when a brand new trend is starting. Not time to do that. I'm going to give you information at the end of our session so that you can join me to dive into all of that more advanced trend development action. This is just a really basic one to begin with. And if we look at this on a smaller time frame here, clear this, you can see that a lot of the waves, even coming out of news announcements, they will be very similar to momentum moves that happened before the news announcements happen. So even at that point, you can still go back and look at previous impulse moves and compare those to have a good idea. Now let's look at, grab my PowerPoint. Actually, the first thing I'm going to do is I'm going to share with you, let's see here. Grab my trade. Nope, I don't see it on here. So let me grab it from the other. I'll just grab it from the other chart here. So I'm going to pull up the Russell. So this is one of the trades that I did here from today. And I want to look at the 50 tick, but hold on, let me clear this stuff off of here. We'll make this bigger. By the way, if you look at this and we kind of squish this up, you can see a lot of those impulse wave actions really, really well. And that's going to be really important in helping you see what led me to some of these trades over here. So if you look at this zone here, we see a lot of the back and forth movements here. what I was doing was I was looking at this core momentum impulse move in here and comparing it to zones where we also had really similar rapid movement and looking at, hey, what happened when those rapid movement zones came to a close? And in a lot of them, what you'll notice is that momentum shifts. And when we go down and we look at this here on a smaller time frame, you'll see exactly how that begins to develop and unfold here. So I'm going to make this into just a 50 tick chart here. So here is what we're looking at. And the first setup that I took here on the Russell this morning was a reversal pattern coming off of this low. So notice that this impulse move here is very similar in terms of the momentum to that impulse move on the way up and the momentum on the way up. Now, what this does is it brings us to that second building block now of price development, and that is, let me grab my chart. Momentum. So with momentum, what we want to do is we want to focus upon how each of these impulse waves is shifting into support and resistance. And we'll look at those here in just a minute. But you'll notice the really strong impulse move here goes into this trading range. Now, what's important with the momentum within this trading range is that if we look at this last portion here, it has a steady, slower overall channel back to the end of the low of that trading channel. And we don't see that in here. In this point, there's not really a bias as to the direction that that's going to break out. But once we get it to over here, it starts to shift that momentum. And that creates the buy setup that we saw here this morning. Pops up, again, similar impulse move size. Here's another example of how our momentum can shift, and that shift can lead to these really strong moves. So what I was watching then over here was some trend exhaustion coming back into a support level here from the congestion, and then that momentum shift again. Now, what you'll notice here is that we have this little flush that happens here. When this range, I call it a foot, when it's very narrow, one of the typical things that we see happening is that it will break the upper end of that trend channel, and then it will flush, and then it will come back and reverse. I was talking about this in a class I was giving yesterday as well, and this is the exact same thing, except it happened in today's session. So what I look for then at that point is a smaller buy setup. So in this case, you can use things like an inverse head and shoulders for a setup. So looking for that slower pullback in here and using that to initiate a buy. So this created the buy setup. Then we had a nice overall shift here. Again, another small inverse head and shoulders to continue that setup. Now, what happened though is that this couldn't gain the momentum. So when we're looking at our opportunities for a trade and what we're going to get for target levels, without this gaining momentum, it means that I'm going to have a harder time getting that bigger impulse move again. To get that bigger impulse move, this would have needed to have started quickly, like that. And then I could have seen a repeat of those previous impulse moves. So since the momentum is shifting, what that means is that I want to go and look at previous examples in the market where there's zones of shifting momentum that look like this, and how long do those moves last before you get a bigger correction? And so that can help me get an idea of, hey, what to look for target levels, where to, begin to adjust tighter trailing stops, such as under a channel, and even possibly reversing the trade too, because the overall momentum here becomes much stronger than the move up here. So we could get channel setups like what I call a chevron, which can then go and create a stronger zone of selling at that point. So we're not only combining our impulse moves for a trend development, but we're also then paying very close attention to what's going on with the momentum. So the slower shifts in the momentum, those are the ones that can lead to those really strong impulse moves taking place. And let me see if I got my Russell chart over here, so I can show you how this ended up playing out. So what you'll see here, let me clear this, is that this becomes that slower overall upside move, and it's having a harder time putting in more than just those smaller impulse moves. We get a little bit of a flush. This overall move creates a zone of congestion in the middle, two waves, but then again, we start to see momentum shifting up here. So we're shifting and we're also coming into resistance. So this created the next setup of the day. And this is what we call a mega lanch for megaphone right here, and an avalanche, which leads to our short side. Now, if we look at the momentum in this in a little bit more detail here, what we have at this point is a zone where we want to start to look at our third building block, and that is going to be time development. So when we're looking at time development, everyone, what we're doing is we're comparing how long a security took to go into a resting phase after these big impulse moves. So how long did this take to go into a resting phase before we really saw an increase with another momentum move? And over again, what you're going to notice is that these zones following similar sized impulse moves tend to take the same amount of time very, very often. So if this is, for example, your main impulse move here, and then we go into our correction, and now you see that same impulse move size and momentum on the way back down, and you see a little short setup trying to set up there, just the channel on the pullback up here. That's a higher risk setup, because ideally what we would want to see would be a zone of time correction that's going to last as long as that previous zone is. And that is going to allow for another strong impulse move to get going, as opposed to just hitting previous lows and getting stuck at that level. These can even be divided too. So you can take this first move here and add it when it stalls again. So those can be very comparable in terms of the time development as well. So then you basically have two types of time development here. Another type is just eyeballing our distance between our highs. So if we're looking at it like this as a head and shoulders pattern, we want the distance from the high, from the start of the left shoulder, to then be similar from the high to the start of the right shoulder. So these are just some really simple ways that you can visualize time development. Again, these are, some of the easier versions, but it's something that you can take away from today's session and start applying to your own trading. Now, the fourth one that we look at is the support and resistance levels. So here we're back at that Russell chart. And what you'll notice is that on this move down, we have these zones of congestion that are happening. And what I've done is I've taken the midway point in each of these zones of congestion. And those are my primary levels of resistance. So what I'll do is these are the zones where I will have execution orders on the books for target levels. And that ensures that as something is coming into a target level that I have a really good shot of getting filled. I usually use market if touched orders, but you can use limit orders if it is a security that is fluid enough and you typically see a lot more trades happening at a single level. Just be aware that if you just use a limit order, you might not get filled. It might trade at that price a couple of times, but other traders have beaten you to it, and so you don't end up getting filled. Now, what I want to do at that zone 2 is I also want to look at how are previous impulse moves measuring up. How many of those equal impulse moves am I also seeing on a run into that level? So if it looks like my impulse move isn't going to be able to put in that full measured move, then I might manipulate how I play with that exit into that resistance. Now, support and resistance levels, this is where there's a lot of different types of support or resistance levels. So you can use things like Fibonacci retracement levels. It's a price level. This is the 76.4% Fibonacci retracement level. You can use things like Fibonacci fans going from that low to here, and that can give you some of the retracement levels and resistance levels as well. You can use other indicators like moving averages, MACDs, stochastics, Bollinger Bands, all of those type of things play into the category of support and resistance. But if you're looking at pure price action, you're not letting those things cloud your chart. You are looking purely at things like the measured impulse waves. You are looking at pure things like previous zones of congestion and resistance. So pure price action is the fourth thing that we want to look at. And I'm going to share a couple of other trades with you here too, and try to get folks back onto the schedule since our previous session here before me ran a little bit over. So the first thing I want to share with you here before we go back and look at some more of my trades here from today is that I'm doing a live 3-hour mentoring program starting on April 2nd. This is a Saturday at 10 a.m. to 1 p.m. Eastern. And what I'm going to be doing in that session is we're going to be covering the 5 building blocks of price development. We looked at 4 here today, and we've only looked at some of the really basics of them. So we're going to go into a lot more detail on those 5 building blocks of price development. We're going to look at how to apply them to the current markets. So that means that in addition to teaching you what those building blocks are, I'm going to show you what they mean in terms of the current market, and this will be open to questions from you guys as well. So what market would you like to look at? So for example, if you are looking at oil, then we will pull up an oil chart And I'll show you how to apply those building blocks to the current chart of oil and how that can tell us about pros and cons as far as pattern development that can be happening and most likely outcome on larger trading timeframes as well. We're also going to be looking at how to combine the building blocks to create and test your own trading strategies. So what that means is that each pattern in the market, such as a bull flag or a bear flag, consists of all of these building blocks. And how they work together in certain templates, for example, like a head and shoulders, they're going to have very specific traits where it's either having a trend placement that is like XYZ or it doesn't have it. It's either going to be a pro or it's going to be a con. And the goal is to get as many pros lined up as possible. But if you do have a couple of cons, recognizing what those cons are. Because if you know what a con is, it can help you maintain your confidence in a trade because you can focus on, hey, if something is shifting and changing, then I can make an adjustment and make a logical, technically based adjustment that is not driven by fear. So I'm going to share with you specifics of one of my own favorite trading strategies, and you're going to have a template that you can print out as well. And we're also going to talk about how to overcome some of the emotional trading obstacles. So those big bad boogie monsters, this was as close as I could get to a scary font, but those monsters in the closet that make it hard to hold on to winning positions or make you hold on to losing positions too long, and how we can swing back to looking at these building blocks to rebuild your confidence that, hey, you are executing things at the right levels. I'm also going to include a coupon so that you guys can join me for League of Traders, where we meet and I teach classes every single day like this class. We usually focus upon one aspect of the market per week. It could be a specific strategy. It could be a particular building block. It could be emotional aspects of trading. But what we do is we look at one thing throughout the course of the entire week, and that is our focus. So we look at not only just, templates and examples of things that have happened in the past, but then we look at it live. So you are seeing these things unfolding in real time, how we make adjustments in real time, how we make decisions in real time. So that is what League of Traders is. And you will get a coupon to join League of Traders. And that is the basics here. So you can join this class by going to tonihansen.com/build. You'll notice it's only $100. So most of the classes that contain this type of information, traders are selling for about $1,000 or more. I like to keep my education reasonable for most traders. I don't make an income off of my website. The funds from the website go to pay my staff and to keep the site running. And sometimes I'm a little short and need to come out of pocket to do that. So I like to make it very affordable for you guys to learn. I've seen so many traders that have gotten scammed in the past, and it can be really leery to jump back in. But I've been trading for 25 years full time. I have not had another job in those 25 years. That is my job. It has been my job. I've traded most markets under the sun, you guys, and I have a pretty good reputation for it too. I teach these classes just like this to a number of the different exchanges, the International Securities Exchange, the CME Group. They've invited me to teach these classes to their traders and to their market participants. So you guys can get that same education for just a $100 registration fee, which again, also is going to give you a coupon to check out League of Traders. and it will be recorded. You're going to have recorded access to this. Now, I'm going to pull up a chart really quickly here and show you my trade on the Nasdaq this morning and how these building blocks came into play here. So this is the Nasdaq chart. This is 30-second time frame. This was my main time frame for trading this. So what you can see is that there are two main impulse moves on the upside this morning. And that is a typical trend exhaustion move. We call this a leg. It's basically a sharp impulse move, a kneecap, and another sharp impulse move. This tilted zone is what we call the foot. Now, what I want to do after a pattern like that is I want to look for reversal strategies. And in this case, we have a really nice two-wave correction here. You can see there's two main lows in here, and then the breakdown of that channel over here. So this triggered my short on this. And we have the nice momentum shift, extreme momentum on the downside, slower upside, extreme momentum in here, slower upside, small head and shoulders pattern up there, and then the trigger point. I built into this at some multiple levels on that point, but that's what got me into the trade. You can see how some of our Fibonacci retracement levels also can serve as great support, but notice that the zone right here is the middle of this kneecap, and that's a major price support zone. The next major price support zone is right here, where this channel breaks right there. So that is often my ultimate target on a setup like this. Let me grab this and move this over, and you can see it basically blew past that after doing a little bit of a reaction off of that 76.4% retracement. So this was the next trade that I had taken today, and you can see all of those aspects that we talked about in today's session in there. So thank you all for joining me here during this session, and it was really nice being back, and I hope you learned a lot of really basic things here, and that you take the opportunity to join me here in a couple of weeks right after spring break. We're going to be diving into the building blocks of price development and how they build together to create these patterns in the market, like that breakdown strategy, like bear flags, bull flags, head and shoulders, cup of candles, and how they can give you pros and cons. So you really know going into a trade, not only what the probability of success of that trade is, but also how it should play out, so that if it doesn't play out the way you're expecting, you can go in and be more aggressive with your management, and also how to time your target levels and adjust target levels as things are moving into those zones. So thanks again for having me here. Got you a little bit closer to the schedule, right?
Well, I wasn't holding you to it, so I appreciate you doing that. Now listen,
no problem.
Everybody who's listening, you got to go take advantage of this. I put the link in the chat so that you can just click on it and go and check it out. You got some time to get in there, 3-hour mentoring program. That's going to be phenomenal. And this is a great offer.
It's also an open class, you guys. So participation from you guys is really encouraged. Ask all the questions you want. I will give a disclaimer, I often go over. So it says 3 hours, but some of my traders joke that you're never going to do it in 3 hours. So I will stick around and answer additional questions too. So
thank you.
All right.
Well, thanks for being with us. I would love for you to come back again soon. Have a great day.
That sounds great. You too. Take care, everyone.
Thank you. All right. I have got our next speaker in the wings. We are welcoming Melissa Armo of the Swoosh, and she's going to talk to us about trade on the side of institutional money in gaps. And I'm going to confess right now This lady is so flexible and so easygoing. I put the wrong time on all of her emails, so she was like, what is going on here? So thank you, Melissa. Let me finish your introduction and then you take it away. Initially, Melissa was a mortgage banker. She changed industries to pursue a security trading career in 2008. And in 2012, she founded the Stock Swoosh LLC. It's an educational firm that empowers traders with a complete and detailed system to become profitable traders. She's a self-taught day trader with over 10 years of experience. Melissa's specialty is a trading strategy that focuses on shorting stocks that gap. Melissa also appears frequently on TV as a stock market expert. You can watch her on RT America, Cheddar TV, CBS, Fox News, and Fox Business Network. And now I'm going to turn it over to you, Melissa. Thanks for being here. Thanks for being so flexible.
Thanks for having me.
I appreciate you coming back. We always enjoy you coming. Now, do you like questions on the fly, or do you like to wait until you're done with your presentation?
Questions on the fly is good. Let me know if you can see my screen.
All right. I see your screen. I kind of tongue-tied now. I always just like having to confess when I've made a mistake because, you know, I'm perfect and all that.
No, that's fine. I'm here. Can you see my slide?
Yes, trade on the side of institutional money. And I think that's the, oh, I can't even think of the name of it. You have a skyline there.
Yeah, that's the Empire State Building.
Empire State Building. Oh my goodness. Okay, I'm going to go take a break. Clearly, I'm dehydrated or something.
Well, thanks so much, Sherry. Thanks, everyone. It's a beautiful day here in Manhattan. Beautiful skyline. It's like 60-some degrees here, so I don't know if this is a sign of spring. But I am here today, and it's a good day to talk because we're getting a tremendous amount of volatility this year, 2022, in the market. Today is no exception to that. So I'm going to talk to you about trading on the side of institutional money, which is exactly what I do. If you have questions, you can email me at melissa@thestockswoosh.com. You can also call me at 929-3200-GAP. You can also follow me on Twitter, Facebook, YouTube, or Skype. When I'm on television, I try to put my hits on there. And I have a lot of videos on YouTube as well. As Sherry said, I appear on pretty much every single major news channel. It's a very interesting time to talk right now. We're seeing what's happening overseas. It is affecting markets. Today, the Fed talk, they're raising rates. That's affecting markets. We're selling off as we speak. We most likely will close today in the next hour and 20 minutes down on the day when we were up this morning on the day. So again, what is volatility? Volatility is something that happens that's unexpected. Could be up, could be down. Volatility doesn't necessarily mean selling, although sometimes it does. It means something happens unexpected. Now for me, I'll just tell you right now, my bias has been that we will continue to sell off, at least right now. I did not buy this move in the market yesterday. I didn't buy the move in the market today. I didn't think it would hold. It's not holding. I didn't get a chance to read the Fed statements yet, but I know they were only raising rates a quarter point. But there's way too much going on right now. And I think that the market is just not ready to go back up to the highs. And to be honest with you, we've had a sell-off since the beginning of the year. And again, we're going to talk about why. We're going to talk about institutional money, and that's the topic today. So why is playing institutional money advantageous to you as a trader? Because that is how you can make money trading. If you're going to take a position in something, I like to get a move. I'm looking to make dollars, not pennies. I take a trade, I want to make $1. I take a trade, I want to make $2. I'm not taking a trade and trying to make 10 cents, 5 cents, 15 cents, okay? You want to be able to take a position, a concrete position as an individual trader and get a move. The only way that's going to happen is if you have institutional money on your side, either pushing the stock or the market up or selling it off and pushing it down or shorting it, okay? That's how you get the moves. So this was, I clipped this from this morning. Actually, this is really good here because the market doesn't look anything like this. This was about 7 minutes till noon. Market doesn't look like this right now. We came down, fell this morning, fell, and we are now red on the day. So talking about momentum, this is how you make money in the market, trading momentum. So I was talking about gaps. We're going to talk about what a gap is here today. I'm going to explain it to you, but my strategy is trading gaps, but it's looking for institutional money. Are they buying the gap? Are they selling the gap? What is happening? But it's all based on spotting and pinpointing momentum to play it, okay? That's the whole point. That's the whole idea. Here's going back to the beginning of this year, calendar year 2022. Again, market attempted a new high in the Qs, failed. Last new high in the QQQs was right over here. It was November of last year. That's a long time ago. Hard to believe, but true. Anyways, going over here, here's the sell-off, here's the sell-off, here's the sell-off, here's the sell-off. Again, this bar has been totally reversed from today. It's gone already. Now, where will we be tomorrow morning? Well, I don't know. We'll have to wait till tomorrow morning. But if we close today red, which I think we will, then we're probably going to be down tomorrow morning. So again, what has been happening in the market so far this year? The market's been selling off, okay? Quite different from last year. Let's talk about PayPal, another good chart which shows you momentum, okay? Again, going back to the beginning of the year, starting out in January, take it over. PayPal was around 187.50. And again, this was, I took this from earlier today. I don't know if this reversed too, it probably did. But this stock basically lost almost half its value since January, since the beginning of this year. So we're 2 weeks into March. That is momentum to the downside, So if you've been shorting PayPal, which we were doing, we've done puts, we've done options in PayPal, we've shorted it outright, done the equity, shorted it, we've made money. Again, if you're going long PayPal, the momentum is not up, you'd be losing money. So you can make a lot of money playing momentum, but you have to find it, you have to spot it, you have to pinpoint it right. Otherwise, you're going to lose. And the thing about institutional money is it's big, it's quick, it's fast. Like today when you saw when the Fed announcement came, boom, all the rally from was gone, and so quickly. So what happened? How does it happen? Volume, momentum, money, big money that comes in and is selling. It's actually selling the rallies. That's what we've been seeing. So learning what to do is very important when risking your own money in the market. And you'll see this since the beginning of this year, even today. Because if you want to trade in this market or any market, you've got to know what to do. So people come to me, they sign up for subscriptions for trade ideas, they sign up for education because they want to learn what I know that took me about 3 years to develop on my own. So I began trading in 2008. Again, it's 2022, feels like a long time ago, 14 years, but I didn't know how to trade when I started. Took me 3 years to develop my system, my gap system, and we're going to talk about that here today. But it is so important for people to know what to do. If you're watching the news or taking ideas on the fly, you've been getting crushed this year. Again, today is a great day because people bought this dip in the market and it's going to disappear and could disappear within 24 hours. So I'm not really even surprised. So here is 2022. This is the SPY. We looked at the Qs. What happened in the SPY? The ZTF for the S&P ran up. The SPY did make a brand new all-time high at the beginning of the year. Failed, boom, sold off hard. This is into the third week of January. And then we had another hard sell-off into February. And now here we are today. Again, this has been reversed. This has been reversed today. I don't know where we closed. But this year looks very different than last year, where we had a very strong market, a very bullish market, where the momentum was up. You could have bought strong stocks last year. You could have bought the market last year. You could have bought weak stocks last year and made money. You could have bought anything and made money in 2021. It fundamentally made no sense with the backdrop of the economy and everything that was happening politically, but the reality is the market kept going up. Things are not happening like that this year. Times are changing. Now, whether you're here to learn something to do, to trade as far as on the side or because you want to do this full time, I don't know. But you can trade on the side and make money while you're working full time, or you can do it full time. I think you need a plan of action if you want to do that. I have people that are working full time and trading options with me. They just get the options trades. I have people that are trading part time in the trading room, go to work in the afternoon. And then I have people that are trading full time. So it's really up to you what you want to do, but you can do this on the side if you want to make extra money, which is a good idea right now. Why? We're in a period of inflation. Gas prices are going up. Food prices are going up. Everything is going up. it's going to continue. The Fed also came out and said their target for inflation is still at 2% to be down by that in December 2022. I absolutely do not agree with that. They were wrong last year when they gave that as a target. They said it was temporary inflation. They were wrong then. They're going to be wrong again this year. And in my opinion, raising rates, it's too late to do it. They're going to create more of a problem by doing so, because the cost of things is going up. Because how do you get everything? Like, how does everything come to New York City where I live? By truck. So the truck delivers it all, gas prices go up, so food, the cost of everything goes up. It's happening all across the country, all across the world. It's not going to stop, and raising rates is not going to stop it either. And in fact, I think it's going to hurt people's pocketbooks as well. So we're in a very interesting time right now, where really your only option is what? Earn more money, make more money. You can work extra hours, get a second job, try to get a raise, or you can invest your money in the market. You could trade your money in the market. You could try to make extra money part-time on the side. The bottom line is that you and you alone are responsible for your own financial future. You can't leave it up to the overall economy. You can't leave it up to, obviously, the people that are in the White House. You have to take your own life and make some decisions for yourself. It may mean work. It may mean a cost to doing this. It may mean you have got to learn something new, which you never did before. But in the end, you'll be better off 3 months from now, 6 months from now, or a year from now, if you take it on the chin and learn and pay the cost and book the time. Because the fact is, I see things are going to continue to go up. And again, I disagree with what the Fed's been saying. They haven't been right about anything in a long time, as far as I'm concerned. And mainly because there was still a problem with the supply chain. There's a major, major supply chain crisis still going on. You can tell that as a consumer. I can tell that when I go to the store. That isn't going to change or help by increasing rates. If anything, it's going to make it worse. Again, because the cost of getting goods and services to you and to me is going to go up because oil prices are going up. And I can see the questions. If anybody has any questions, you can just plop it in. So getting back to what I was talking about, institutional money. This is how I make decisions. You need a strategy to spot institutional money beforehand, so that you know to get in. Many people have been buying the dip. They bought the dip back here. This was late February. They bought the dip in here. This was the beginning of March. They bought the dip in the last 2 days. It's failing already today. Many people trade as their strategy, which is buy the dip. It hasn't worked the entire year of 2022 at all. Now, again, this is a very different market than 2021. So you might have done something last year that worked, and now this year it's not working. Overall, buying the dip isn't a strategy. Sometimes it works. Sometimes anything works. Sometimes buying a Reddit stock works. It doesn't mean that you should do it all the time. At the end of the day, you need to do something that works consistently in order to make money trading. You got to be in it for the long haul. It's the idea of doing something Monday, Tuesday, Wednesday, Thursday, Friday that works in any market conditions, bullish or bearish. And it's the idea of finding the particular stock that you want to get that is being bought by institutions or sold off by institutions. So again, you can make money in the market. People do it all the time. However, not everyone does. Why? Because most people go with the crowd. The crowd has been buying the dip. It's wrong. It worked in 2021, like I said, even for weak stocks. I never do that. It doesn't work. It doesn't work consistently. Just because something worked as a once-off doesn't mean that you should ever do it. And it's very rare that the market ever power trends even up for that to continue. Anyways, making money is about consistent gains. So again, even if it's a little bit, I call it chunking it out. It's not sometimes. $200, $300, $500, $1,000, chunk it. I think it's a lot easier for people to set their goals and say, I want to make this much per week, this much per day, this much per month. Break it down, because sometimes when people have too big of a goal, they can't wrap their head around that goal and look at it on an annual basis. So make it small and break it down trade by trade, day by day. Talk about momentum. Talk about institutional money. Let's talk about CVX. Now, this is Chevron. This is the ticker symbol for Chevron. We were talking about, I said, don't buy this market here, don't buy this dip. This is one thing that I do like. I do like higher, okay? This is an oil stock. This is the strongest of any of the picks of any of the oil stocks right now. Stronger than XOM, even though we did do a trade in that the other week, and it worked as a 1 day off. But this is higher. And so let's talk about momentum. I was saying institutional money. What happened here? This was just a couple of weeks ago. Again, not even a month ago. Today's the 16th. Back in here, rallied. This was around 135, flew up like a rocket almost to 175. How did it do that? Ran up 40 points. How did that happen in the span of 2 weeks? The stock got bought. It got bought. The momentum was where? To the upside. Buying came in, took the stock to new highs. And again, this is institutional buying, big money. Down here's the volume. Okay, this was the biggest day. That was where it ran up almost to 175. So the momentum in a stock like this was up. You would have wanted to be long here, okay? You would not have wanted to be short. The only way to make money here would be going long, not short. So how do I find institutional money? What is my strategy? It's gaps. So why gaps? Because gaps are created with institutional money. Most of the ones that I'm looking for anyways. Most stocks in any single given day will gap. What is a gap? A gap is the difference between the close and the open. That's it. You can have bullish gaps, you can have bearish gaps. I'm looking for gaps that are made with institutional money. I use a way that's a checklist that I go through in the morning to qualify the gap, to determine if I want to go long and to short it. That is what I do. Not every bullish gap can you go long or short. Not every bearish gap can you short or go long. So I qualify to find what I call the good ones, the ones that I want to take, the ones that I want to train, which is fewer than you would think. So in any ways, again, most stocks will gap on any day. Doesn't mean it's playable. So I'm constantly looking to find the good ones. You only need one good trade a day, one good ticker symbol a day. That's it. That's all that you need. You can do it as an option. You could do it as a swing trade. You could do it as a day trade. You could do it as everything. That's it. You will have less losses if you take less trades. You will also have bigger wins if you focus on finding the good things to do. It is about quality, not quantity. Okay. So again, I didn't go long this gap up today in the market. It's failing, like I said. It wasn't a good bullish gap per my system. But let's talk about what is a gap. I'm just going to explain. There's a lot of gaps. A zero ball chart of the market here, SPY going back to October. Let's go back to, well, let's go all the way over here. This was November of 2021. Market closed here, gap down. So what is a gap? When the market closes, it always closes at 4 o'clock Eastern. Again, I'm in New York City time zone, so I'm Eastern time zone. At 4 o'clock, boom, market closes. So whatever number this is, that's the close. It's imprinted there, it's it. Then the next day at 9:30, you have an open. That's over here. In this case here, this gap down. The close was here. The open was here. So the open was lower than the close. So this was a bearish gap. And if you wanted to short this, actually it worked. Now, what is a bullish gap? Again, a gap is a difference between the close and the open. This closed here, this gapped up. So this closed at one price and opened at a higher price. You could have gone long here. And actually there was a trade in here that worked. You could have gone long. Okay. That is a bullish gap. There are many gaps in the market. The market gaps most every day. So there are bullish gaps and there are bearish gaps. But a gap is the difference in the close and the open. Let's look at today. Market closed here last night at 4 o'clock, open up today. Rallied, it's falling, but it did gap up. I didn't do it, but it really did gap up. Okay. What about over here? What about this guy? This was the 8th. Okay. Oh no, let's go over here to the 7th. No, let's go over here. This closed here, gap down, fell. This closed here, fell off a cliff, closed here, gap down, fell. That was the first week of March. Okay. So there are gap downs and there are gap ups. Again, what is a gap? Let's look at Facebook. Another one that has really taken a tumble in recent months, really since 2022. A terrible, terrible, terrible move to the downside. This closed here. This was the night before the earnings. This was Facebook. It was around, I don't know, 315, 316. Opened down in the morning here. You can take it over. It was well under 240. So this got crushed in the earnings. So this is a gap down. Okay. We did short this. We did puts in this. We did it. It worked. What about momentum? We've been talking about momentum. Again, I pinpointed the momentum would continue it down. Therefore, it's going to keep being pushed down and sell off. And that is what happened here. The stock really, again, fell off a cliff. went under 200, fell, almost got down to 175, okay? So again, I'm looking for the institutional money. Here's the volume. Institutional money dumped. And again, why? Who cares? I don't know. I don't have time to deal with the fundamentals of this. It was an earnings gap, but the fact is I'm looking at the technicals. I'm looking at the gap. I'm rating the gap and I'm saying, wait a minute, this is going to get sold off by institutions. Therefore, it is a short. The stock price is lower. You can do a put in it or you can short it, okay? Now, again, can you short every bearish gap? No. Here was a gap down here that flipped. Stock closed here, gap down, reversed. If you shorted this here, you lost. So you cannot short every gap down, but I'm trying to find the good ones that I can to short. Just like I'm trying to find the good ones to go long, I can go long, similar to, like I said, I did not go long the market today because I did not like the market today as a long. I'm trying to find the best thing that I can do that institutions are going to grab hold of and create the momentum, because what is momentum? What makes the stock move up? Buying, which is happens how? Money comes in. Same thing with selling. How does something go down? How does it get pushed down? It gets dumped, sold off, and shorted. And hedge funds can short. So when I say institutional money, I mean hedge funds, big banks, okay, which take big positions in stocks. But getting back to what I was saying, you only need one good thing to make money, one good trade every single day. And I go through in the morning a checklist to rate the gap to determine that for myself. You also need a method and structure to enter and exit the picks. So if you get a great entry, a perfect entry, and get the direction right, it really doesn't matter where you get out. You can hold it, get out to the first move, you can get out to a holder move, you can split it, get out of some, hold the next to a bigger target. My goal every day is to never want to get the direction right. Get something that's going to have a big move and get a perfect entry. You get an early entry in something. In other words, you go long and get in near the low of the day, and you short it getting near the high of the day. It really, you have the flexibility of getting out wherever you want because you have such a good entry, So my goal is always to get an aggressive, perfect entry in something so that I could take half the position off, hold if I want to, or get out early, all right? It's the idea of seeing it ahead of time in the post-market or the pre-market when I'm seeing, in fact, the gap. That is where the gap is being created, and that's how I'm getting in so early to be able to get the trade. Now let's talk about some of the trades we did. This is Zoom, and this is a nice one here because it really doesn't look like much, but it actually was a beautiful trade. So this is Zoom over here. See this with the taily guy? This closed here, gap down, fell. We shorted it. That's a gap down, and we shorted it. Another one, momentum. Talk about momentum. Look at what this chart has done since November, or even since January. Again, stock was around here 175. This lost almost half its value too. So this was the 1 minute in Zoom. Again, here is the momentum. Here is the institutional money. Selling, pushing it down, push, dropped into 10.15. So we did a nice trade in that. So what was the trade? The entry was 117.50. This is a day trade on margin. You have to have a broker's account that's a margin account in order to do active day trades. 800 shares was a risk of 30.40. 117.50 we added. Total shares 1,600. Average price was 117.50. We exited at 114.75. I thought that was a good exit. It did continue lower. $4,400 profit. You could have taken less size. You could have risked $1,000, $1,500, and still had a great trade. The idea is to get in at the perfect price point, and then also to get the move. Again, this is what you want to play. This is the momentum, and it's being created by the gap right over here. Okay, that was 3-2. 3-2. Anyways, I have a live trading room where I call trades live, where I call the entry, exit, and stop in the room. That was something that we did. Here's another one that we did. We did Boeing. And what's really interesting about this one here is this close here, gap down, fell. We shorted it. It reversed to the day. That was another Fed day. We shorted this though, and we made money and got out before it flipped. But we did puts in Boeing to the downside here. We got that sell off. I have not looked at this today. Actually, I have to go look at that when I'm done. Anyways, Boeing is another one. People have been buying it. I've been shorting it. This closed here, gap down, we shorted it, got the drop, got in, out. Usually for the day trades, I'm looking to get in and out quick, 5 minutes, 10 minutes, 15 minutes. This was 228. I find that when I'm day trading, I want the fast, quick moves. When I'm doing options, I will hold a little bit longer because I'm trying to get a bigger move and I'm trying to get more follow through overnight. So that is what I like to do. Short, quick, fast day trades, holding the options. Again, it has to do with the type of account you have, how much cash you have to trade. Options, you can open up an options account with as little as $2,000. You do not need to have a margin account. You can open up a cash account if you want to trade options. So some people like doing that. A stock like Boeing, obviously this is a little pricey to do it on margin, but you could have also done an option in this too. Entering the short we did that particular day, February 28th, was 198.50. Boom, we got in 1,500 shares with a risk of 2,700. In, out. Again, try to get as much as I could of it. Trying to get $1, $1.50. 196.90 was the exit, profit $2,400. Again, what's so interesting is that we pinpointed that beautiful, beautiful, beautiful entry, got in, got the drop, up, out, and it flipped. I mean, again, this was a particular day where you wouldn't have wanted to be in anything in the afternoon because of the Fed, but you're seeing that today. You're seeing that today. I don't play through those Fed minutes. You never know what's going to happen. Again, today we're selling off, as you see. But anyways, this was a nice short, in and out quick. That is a day trade. You would have needed margin to do that, okay? And for those of you that don't know what margin is, you should look it up and Google it. No one trades with full-on cash at 100%. Margin is you get 4 to 1 of your money at a retail broker. So you don't have to have the full cash requirement. No one is trading with that. Even big traders use margin to trade. And particularly because we're in and out, we're flat before 4 o'clock, and we're in and out of most trades in, just several minutes. Any questions here so far? So getting back to what I was saying, if you know what something will do in the stock before it does it, you can make a lot of money. And that is how it happens. It's the idea. It's having a niche to be successful because there's so many people in the market and so many people want to make money and everyone's fighting for the same amount of money. When you go into the market and you're trading, you are not knitting socks and selling them out. You're not creating an actual product that you sell and get cash for. You, the person that makes the money when they enter a trade, when I enter a trade and I make money, I'm taking cash from someone else. When I'm shorting this market and people are buying it, I'm taking their money. At the end of the day, this is about who gets it right. And that's one of the very important reasons about following institutional money, because that money is always right. It is always right. Always. Gaps are created with large institutional money. That is what makes the gap. The professional gaps that happen and play out in stocks are formed by one thing and one thing only, large institutional money. Therefore, you need a way that will help you pick the correct direction to play the gap and then confirm that the large money will flow with it. So it's following the footsteps of institutional money in a stock. That is how I do it. And the market. And again, you can see big, beautiful moves in the market this year. I mean, I've not seen follow through like this in the market in so long. And it's so nice to see it. So how much money do you need? Again, if you want to do options, $2,000 is the minimum at most retail brokers. To do options in a cash account. To day trade at a retail place, you need $25,000 to have a margin account. You could open up an account with less, but you will have to be at a prop firm if you want to do that, or you will have to only take a certain amount of trades in a certain amount of days. Call your broker, find out the requirements. I am not a broker, but you can do this with a small amount of money. You just have to work within the parameters that you can do it. As far as your returns, you're looking for 1 to 1. You're risking 500, you're looking to make 500. If you're risking 1,000, you're looking to make 1,000. And again, this is not an exact science. This is an average that you're looking to make. But I have targets on my options newsletter. I have targets in the trading room. I give the targets in the class. I teach the targets. Okay. Now let's look at Facebook daily. Again, we talked about this. Again, look at the volume, look at the momentum, look at the gap. This was back at the beginning of February. It was an earnings gap. I called an option in this though before the earnings. It was January 13th. I called the 3:30 Facebook at the money puts that expired on the 21st of that particular day. Let's go look. 113. 113 was here. See that little bar there where my arrow is? That guy right there. So we did it, take it over, right there, got the drop, out, boom. Again, doesn't even look like much. Doesn't even look like much to anything at all. Just this, getting it at a perfect entry and the momentum and the direction right. Could the drop, timing is everything. Again, and the entry too, a beautiful trade. Beautiful trade. Cost was $3.80, 3 contracts with a risk of $11.40. Whatever you risk, it should be the same or close or equal to the same. I don't care what you do. Every trade you take, you gotta keep your risk consistent too. Sold at 12, profit was $2,460, return on investment 216%. Again, this doesn't even look like much, and yet it's beautiful. Right here, here's the selling, get the drop. This fell, closed here, gap down, rallied, gap down again, fell, boom. So again, when we're doing options, we're chunking it too. We're taking it, get the momentum, get out. Taking it, get the momentum, get out. Same thing with the day trades. Again, a put is a short in an option. We also did that very same day we did Netflix. Stock closed here, gap down, we did it. The strike we did was 520. It cost $13.50, which isn't cheap. 1 contract, which is $13.50, sold at 24, profit $1,050, 78%. Now, if you held this into the very last day, which I did not do, I'm going to show you in a minute, you could have made an enormous amount of money. The close price of the day, of the last day of the expiration, was 125. I did look it up and I had it there because I really wanted to see what it was, even though I didn't hold it. So when you're up in a trade, I don't think it's a good idea to hold it into the last day. This could have reversed under the earnings. It could have gone up here. So you don't know. If you took 2, you could have got out of 1 and held 1. But either way, I just want to show, again, the power of momentum, the power of institutional money, the power of the gap. This closed here, again, was underneath the strike at this point here at 500. Boom, open in the morning. But this is the very last day of expiration, open here under 400. And that was why that was worth 125. Again, a huge profit, huge return investment if you held it. I don't know if anybody in my newsletter subscription service did, but it's difficult for me to hold through earnings, not knowing what the result will be. It could go in your favor, could go against you when you're up in the trade. Now, it's different if I'm down in the trade and I hold it into earnings to see if it goes in my favor, but that was not the case here. This was already up. But again, it shows the power of the gap. Then we did another one that very, very same day, again, 113, had the market with us, boom. We did the 471 at the money puts here, got the drop, boom. Beautiful thing. This was another one you could have held the last day and actually made more money. Again, I did not do that, but this was a good exit here. This dropped down in here, 20 plus points. Again, if you've ever done options, you know you've got to get momentum. You've got to get it going in your direction. And again, it's timing. Timing, that same day, same time. This is a newsletter subscription I send out to your email. You get it in live time. You take the trade. Cost was $340, 3 contracts, risk 120 or 1020, sold at 24. This was a huge trade. I'm going to go back and show you the chart in a minute. $6,180 with 1,020 risk. So again, this was the 13th. Got the drop, closed here, gap down, fell. This is the 20th. Take it over. You see where it dropped. Fell through 450. At the last day, it almost got to 435. But again, it was a 600% return on investment exit the 20th. I don't know where this went that day. I didn't look it up. So again, momentum. How does it come in? Institutional money, boom, dumped it, sold the market. This is selling. Down. When you're doing a put, you're basically shorting, okay? So that was a nice call. It's about chunking it out. Chunk it, no matter what you do, because that's how you're going to get ahead. That is how you're going to reach your goals. But success or failure is everything to do with the quality of your system. And I think a lot of people, like I said, they don't have a good system. They don't have a good strategy, or they're doing things that just quite frankly don't work in any market conditions. And people are seeing that right now. And you also need a niche to be able to be successful. And I can't believe how many people just don't understand momentum. And again, this is again just from teaching people, talking to people, answering questions. People don't know how to play momentum. They're scared of it, or I don't know. They definitely don't understand gaps or how to do them either. People want to do gap fills. That doesn't work. So I think that it's just finding something that you can understand. And really conceptually, what I do really just makes a lot of sense. But how do I figure out which stock I'm doing in the day? I go through the points in the morning of a 26-point rating system. It pinpoints the direction of the footprints of institutional money and gaps. This is what you'd come and learn from me if you wanted to take my class, okay? You would learn how I read it and what direction that I'm going to do it. I will say that I do tend to go to the short side first. If I don't find a good short, then I will look to the long side, but I prefer to short. One of the reasons I also prefer to short is I feel like I have an itch for that too, because many people do not understand how to short or don't know how to short well. And that's another reason why people are getting crushed in this market, because again, we've been selling off. We've been selling off. So that's difficult for people when they're looking for something to do. Again, what do I mean by institutional money? It's selling. Stock closed here. Facebook, this is back at the end of November. Gap down, fell. Again, sold off here, sold off here, sold off here, sold off all in here. There's probably reverse today too. I'll look at this when I'm done. Okay. And you know, when you look at some of these things, some of these stocks, especially in the tech sector, and then you look at where the market is right now, I mean, it's no surprise that the market is not back up at the highs. Again, what do I mean by institutional money? Netflix. This closed here, gap down. This was to start out the calendar year, fell. We talked about the one in here, dropped. Then we talked about the one in here. Again, this was earnings. The stock lost more than 100 points in the earnings. Look at that. Fell, boom. Again, momentum, selling pressure coming in. So my niche is really following the institutional money in gaps. And I created a system which I termed the golden gap to find it. I go through this process in the morning every single solitary day. By having a formula to rate and qualify the gap, you get confirmation and conviction that the large institutional money is on your side, and then you play it. Gaps are an event, and they create a sense of urgency. Hurry, hurry, hurry. Thus, an action is being forced by participants of the stock. This is why gap trading is incredibly powerful. Trading golden gaps is a powerful and profitable way to trade because you're trading on the side of power money. And that's what makes it so important, because again, you're not going to be able to trade against that and be successful. It is just not possible. Someone's asking something about charts. Let me scroll up. I don't make decisions based on that. I could take everything off my charts. We'll see. I may not have time to bring up my charts, Pierre. I look at the gap. I could actually trade reading the tape. In fact, some people's charts look like planetary solar systems. I don't even know how they can look at anything. Forget all the stuff. Look at the price. Sometimes well, this has been 2 years now since I've been in studio on TV, but sometimes I was in the Fox studio, had to go on TV that day, talk about it. Today would be a good day with the market. I'd have to look at the price on my phone, see where it was, didn't have my platform with me, didn't have a chart, and determine what was happening. You've got to read the price. Get off of some of these indicators. Some of you are just live and die with these indicators. If it was that easy to make money by buying a moving average or buying a Fibonacci or selling something like that, or doing a whatever you want to call it, whatever people call these different setups, no one would lose, people. It would be very easy to trade. There is analyzing and a thought process to what I do. I look at 26 points. It's a skill. It's a skill set. You must learn the skill set. It is not black and white. And I find that's another thing that people have difficulty with as well. They want to get on this one thing and swear to God by it. And you can't trade like that. You just can't. And again, people that are taking positions, institutions that are taking the positions, they are making decisions based on lots and lots of information that we're not privy to. They're talking to the administration. They're buying research reports. They're watching what's happening overseas. They have contacts overseas too. These are huge, big banks also. I mean, you have to understand what's going on in the world today. We will never be privy to the information why the institutions are buying or selling any one particular thing in the market. But I can see the gap. I can see the price. We have live data. That makes it important. We live in an electronic world. The last umpteen years that I've been trading, we've had electronic data past, I can go back to 1999 in my charts, but prior to that, think back, 100 years ago, or when the stock market opened, how did people trade? They read what was happening in the price. they didn't have moving averages. People just cling on to those things. And sometimes people don't give up on trades that they should get out of with a loss, actually, because they're clinging on to them. But anyways, you have to win more than you lose. It's about being consistent. So year to date, we're 78% win ratio in the trading room and 87% for options. It's been a good year. Again, it has been a very, very good year. Today is another key day. I predicted the market would sell off, and it is. I mean, and people bought this. It's been a very volatile time, but that's made for great trading if you know what to do. Again, we talked about this. We're looking for one-to-one. Make consistent trade selection. You've got to be consistent in your risk. The entry has to be there. The direction has to be right. That's obvious. If you go with the money where it's flowing, you'll get the momentum. Why does this matter? So you know what direction to take the profit, because you need money. The money creates the momentum. If it's going up and you're shorting, you're going to lose. If it's going down and you're buying, you're going to lose. Institutional money is very deliberate. It's very deliberate, okay? You're seeing that today. You're seeing that today with the swift sell-off today, right after the Fed. You've got to create a plan of action for yourself if you want to be successful. Again, if you want to come and learn from me, what will you learn? A high probability of directional bias for the entire day, finding the best stock, that it's going to have a big move. We're looking for early confirmation of the move between 9:30 and 10 and precise entries with follow through and a risk to reward. So my system is called the Golden Gap. I teach this class once a month, and I teach people how to read institutional money and the price patterns in gaps. So if you come to me, you will learn how to find and spot and play momentum in the gap, how to pick the best gap, and then how to trade it. And so it's basically a rating system. So there are people with me that are trading with me that have not done the class. Then there are people that have done the class. There are people that are just trading options. It's a subscription service. They've never done the class. They just take the trades. They manage them themselves. I do have targets in the letter. Some people are doing really, really, really well this year. I don't necessarily ask everyone what they're risking, but I do get emails from people telling me how they're doing. And again, it's amazing to me because a lot of people are getting chopped up this year, but we're really doing great, as you can see from the win ratio. It's about focus, though. I personally have to stay focused, and I'm not saying this market isn't tricky. I'm not saying that at all. I had 2 people call me today that actually manage money for people to ask me what I think of this market. It's funny because I called him back before the Fed, and I said I still think we're lower, and then we fell. So it's, you know, people do want my input. I focus every day, though. I do watch the news. I do watch what's happening. I have to talk on the news, so I need to know what's going on. But it's really the price action. It's really the price action when I'm making a decision. And you have to be serious about this. You're risking your own money. I don't care if it's $100 or $1,000 or 10 grand in a position. You've got to be serious about risking your money, and you should be taking trades if you don't know what you're doing. Take a step back and learn what to do. You will get chopped up in this market. It's as easy to make money as it is to lose it, but you won't win if you don't know what to do. What people were doing in 2021 just simply flat out isn't working this year, and we're already almost 3 months into the year. And I think a lot of people have blinders on, and they're continuing to buy the dip. In the last 2 days, it's not going to work. It's already not working, you know. And people just have these things where they don't want to give up on them, kind of like I was talking about indicators. Anyways, if you want to come and learn from me, I will teach you my method. Again, it's in a 2-day class. I see we're getting close to time. If you'd like more information about my course, you can email me. The dates are March 26th, 27th. It's 9 to 5 Eastern time. Class is online. Class tuition is $69.99 US. Email me if you want to sign up. And we're doing a webinar special. If you sign up by Friday, you get the trading room free to the end of the year, where you get the live calls. If you want the options trades, it's $49.99 for 6-month subscription and $69.99 for a 12-month subscription. The options trades are emailed to you. And if you want a trial, email me too. Any other questions? I went a little bit over. I hope that's okay.
You're fine. You're fine. We're right on schedule, actually, since we did have
Thank you, Sherry.
a bit of an overage back there. You do have somebody saying, what are the moving averages on your charts?
I don't want people to think that they can trade with those. Don't worry about it. I don't make decisions with that. That's
Okay.
I thought I answered that, because I don't want people.
Oh, you probably did. You probably did. All right, cool. Thanks for being here. I appreciate it. Now, everybody, you need to go in and take advantage of this. Marina, the trader chick, Villatoro, specializes in helping people day trade with confidence. She's been trading financial markets for years, using trial and error to gain insight. When she began trading E-mini futures over 8 years ago, she realized that no one was teaching the most important part of trading, which is the basics, reading and understanding the market language. It speaks loud and clear to us, and being able to understand it, truly understand it, will take your trading to a whole new level. Do you like your questions on the fly, or do you like them at the end?
I like them on the fly.
Okay, let me get to that. And there you go. You have access to seeing everything. And you know, for some reason it shuts your mic off for just a split second. Okay, you're back. Good deal.
Okay.
I'm gonna mute myself and you can take it away. Thank you.
Thank you. Thanks for having me. And hi, everybody. Thanks for being here. Thanks for waiting around. And I'm excited that you guys are here. Hang on just one second. I just want to set this up and have everything ready to go. So how is everybody today? I'm so grateful you guys are here. I can't believe it's already mid-March. I feel it's actually, I think today is 2 years since the world kind of shut down for COVID, right? And now we are dealing with another whole worldwide craziness of the Ukraine, the war and whatnot. It just doesn't seem to stop. I just wanted to say, again, thanks for being here. Today, what I want to do is talk to you guys about scalping. I don't know if any of you guys ever scalped or know much about scalping, but we're going to be talking a little bit about why it is less stressful and more fun. And especially in markets that are as volatile as right now, I believe that scalping works a lot better because you could have those really quick moves, and that's the cool part about it. So here I am, Marina, the trader chick, and that's one of my little people. And I have a confession to make. I am a scalper. So the reason why I even say that this is a confession is because until I started talking about my strategy and what I was doing and how I was going for smaller profits, I didn't even know this was a thing. And apparently it's a whole thing. And now I completely embrace it, even though it has such a weird name, right? Scalper. Every time I hear the word scalper, I think of Indians, you know, and scalped foreheads. It's that kind of creepy. But if you look at it in a trader's point of view, scalping is actually a super fun thing. So again, I had no idea that I was a scalper until I was told about it. And the only way I even stumbled upon scalping was because I started off with a huge loss. I think the majority of times we come up with solutions, which was really the solution for me when we go through a massive loss or a massive lesson or whatnot. And that's exactly what I had to go through, was that. And for me, it was literally almost $4,000 of a loss within 5 minutes because I was chasing a trade. I was looking at the wrong way. I put my ego on the line. I put in this artificial mental stop, you know, the whole gambit of emotional trading. And I ended up blowing my account literally in 5 minutes. And this was the third time in 2 months. And the scariest thing of all was that I did not stop. I ended up revenge trading for another 2 full days because I was sure that my ego could win and I could get back my losses. And the reality is, we all know once your ego comes to play, once your emotional mindset comes in, you will never win at trading, right? And that is literally when I had a complete and total breakdown. I had a breakdown. At this point, I was doing it for 2 years. I was not being successful at it. It was just really, really tiresome. And I just had a breakdown. And normally when you have a breakdown, and it doesn't have to do with trading, it could be with anything in life, whatever. You will have 2 things that come up when you have a breakdown. One is you quit, you get out, you never do that thing again, or in this case, you never trade again, or you have a breakthrough. I don't know if you guys have ever seen this movie, Nacho Libre. It's one of my family's favorite movies. So Nacho is this really funny character, and he wants to be a luchador. A luchador is, in Mexico, they have this thing called lucha libre, which is wrestling, and he desperately wants to be a wrestler. And the thing is, he's really bad at it, right? So there's this one scene in the movie where he's standing in church praying to God, and he's saying, why did you give me this strong desire to be a warrior and made me so lousy at it? And after about 2 years of constantly trying so many things, I literally felt like Nacho. You know, I was like, why did you give me this massive desire to trade, and I feel so bad at it. And long story short, Nacho obviously goes and wins the best match and becomes, like the hero. And for me, I ended up coming up with a strategy that really works. And I ended up actually coming back and simplifying things. So I had this massive breakthrough. One thing I did notice when I was trading, and I was in all these courses, I paid over $20,000 in courses and mentorships and all these different chat rooms, you name it. Every time I asked questions about the basics, right? Like about the trends, about reversal patterns, about divergences. I was literally treated as if I was supposed to be born with this information, or even worse, completely ignored altogether. And what happened was, another thing that I was also taught was, to go for big targets. I had like 10 indicators going on. I had 3 monitors going on. I mean, I was in constant analysis paralysis. So what happened was, after I had my breakdown, I walked away. I actually quit and walked away probably for like 4 or 5 months. But when I came back, what I did was, first thing I did was take 2 of my monitors and threw them out. I literally put them outside on the curb, and I was like, if the garbage men want to have brand new monitors, it's going to be their payday. And the other thing was, I stripped my charts and made them completely bare naked charts of all my indicators. So I find that a lot of people today watch all these different YouTubers, summits, and all these, like, for instance, the question, which EMA lines do you use? And they just use all these different people's indicators and never actually test them out. And that's what I used to do. I used to do the exact same thing. And then what I started to do was, I started to put in each indicator. And today, that's what I do with my students. I tell them, when they come to me, they have like 10, 15 indicators. I'm like, do all of these indicators really work for you? And they're like, we don't know, but we heard that this guy said it was good. I'm like, try to focus on each indicator. See, does it really do something for you? Because I used to do like that. And then I realized that more than 75% of those indicators did not work for me. And they just literally put me into massive anxiety, massive strength. I had constant analysis paralysis. And once I just started to eliminate that and simplify it, my life became so much better, and my trading did too. I now trade with 2 indicators, only 2 indicators. And that's when I just started to study the charts for years. And I literally became fluent in the market language, because I started to recognize that it was a language, and I started to listen to it and to read it. So why does scalping work? One thing that I notice about scalping is that when it's really quick, you don't have to stress that much, right? So the majority of my trades are between 3 to 15 minutes, and actually even less today because of the high volatility. One thing that I had going for me before that was really killing me was that everybody was talking about the big targets, right? Yeah, it certainly looks great when you want to go for the big targets, and it is so romantic on paper. But when you're going for big targets, one is you have to put up a big risk, right? And I just didn't have the stomach for that. Secondly, I didn't have the willpower or like the patience to sit for a long time. And when I started to put in smaller targets, and it wasn't even about winning the money, it was about building my confidence, because my confidence levels was shot, right? When you lose constantly, your confidence level is actually what gets hit the hardest, right? The money, you'll figure it out, you'll make it back somehow, but your confidence really takes a long time. So I said to myself, well, what if I start hitting these little profits? And before I knew it, I started to hit these little profits. And yes, I was making money, but what was also really happening was that my confidence and my belief in myself was really working. And to be honest with you, that's why I think scalping is so much better. It's that hit of that ding, that, hearing that, yes, you hit your profit, and it really helps. So I want to do a really quick intro of who I am. This is me. I am Marina, the Trader Chick, and I am an expat living in Antigua, Guatemala. And I am a trilingual. And the only reason why I bring up that I'm trilingual is because I started to recognize that the market was its own language as well. And I think that came about because I ended up learning Spanish, my 3rd language, in my later years, and recognized that there was this process. And I use that process to start to read the markets. And that's what really, really, really made the difference for me. And before I was a day trader, I was actually a fitness instructor and a travel writer. And the main reason I bring that up is because a lot of people believe they have to have a financial background or a math background. And it's not true. I still run my travel site. You can still go and find it right here. So I still am a travel writer because for us, for my family, travel is not a luxury. It's a necessity. So having that capability of being able to travel and trade from wherever really, really was important. All right, guys, so let's get into the basics of trading, because just like learning a new language, you cannot jump into a philosophical, really a powerful conversation if you don't even know how to say, hello, my name is Marina. Right? I mean, you can't keep up with it. So it's the same thing with trading. You can't go and make these huge, massive strategic moves without even having the understanding of why you're making those moves. And bringing back to the basics and simply understanding what's in front of you, I can guarantee will completely change the entire trading game for you. Okay, so before we go into all of this, I do have a free presentation for you. It's literally the presentation I'm going to give you now, so you can go along with it. It's completely free. All you have to do is go to makingofaDaytrader.com, makingofaDaytrader.com. You can go and get it right there, makingofaDaytrader.com. Go and download it and follow along with this. Okay, guys? So right here for free. Now, as I mentioned before, I only use 2 indicators now, and this is my platform. This is my canvas. This is what everything is. If you guys want to be professional day traders, you need to have a platform. There are so many wonderful platforms out there right now. So you have definitely a lot to choose from, but you need to have one that gives you free universal indicators and also drawing tools. So these are my 2 indicators. I have EMA lines and my MACDs. I absolutely love the MACDs. The MACDs are the least lagging indicators out there. So let's begin with the market movement. Okay, we all know logistically there are 3 trends. There are 3 trends. We have the upward trend, the downward trend, and we have the sideways trend, right? But the thing is, with the sideways trend, or we could call it the exhaustion pattern, the indecision area, the consolidation area, I mean, all of these are the same thing, for the same names for the same thing, right? However, this is where the majority of the money gets lost, right? This is where the majority of your profits of the day gets taken away. And if you could recognize this and spot it before it starts, you will be able to stay out of so many bad trades and enter when there is a transition or a breakout, because those are those powerful moves where you get the most amount of profit. All right, so understanding the trending markets, knowing that even though it's going down and now it's flat, it does not necessarily going to continue down. It can transition, but we need to wait to see when that happens. So understanding trends, right? I mean, obviously we understand that the upward trend is when each pivot is moving up higher than the other pivot, right? It's the bull market. It's when the market is trending up. It's when the market is going up, right? It's also what's called going long. What does that mean? It means that you are buying, you are entering at a low price point, exiting at a higher price point. You're going long, you are buying, and then you are taking the profit in between. That is called a buy or go long, right? Downward trend. Here you have each pivot is lower than the other one, right? And just like Melissa was saying, that shorting the market is so important for day trading, right? So that's what we do when we see a downward market. We are shorting the market. That means we are taking a high price point. We're entering at a higher price point, exiting at a lower price point, and taking the in between, taking the profit in between, right? So we are shorting the market, or selling is the other word, right? This is a bear market. Now, understanding consolidation areas and the transition areas, or I like to call it the trader's worst enemy. How do we spot this? So we have this consolidation market right here, right? We have this consolidation market and it's going up. Okay, this is that channel, that flat area. This is where all of the losses happen. And why is that? Why do these losses happen here? Mainly it's because people, traders, especially amateur traders, like to, what I say, predict what the market is doing or try to beat the market. The reality is we'll never be able to do that, right? So when a lot of traders see what's going on, they're seeing that there's this consolidation, this move up, they're seeing this sideways movement. And for instance, if they're seeing, a trending market, they're saying, you know what, the market is going to go up, I'm going to go long. Or if they're a contrarian trader, they'd be like, you know what, the market's been going up all day, I'm going to short the market. But the reality is it's flat. It's a flat liner, right? Like there's nothing at all going on. So knowing when to stay out of the market is probably the most important thing you can do. And knowing when to stay out of this market is literally the key. So seeing this, okay, it's understandable if you get in the beginning because you're not really sure that it's going to be that area yet. However, when this area is proven, you need to stay out because that's staying out of bad trades and it is staying out and waiting for confirmation for the good trades. And these consolidations happen over and over and over again, right? Now, it's really important to understand how we could spot these areas, how we could draw them in, and how we can respect them because the market respects areas. And we as individual retail traders also have to respect it just the same. So what are these areas? Support and resistance. So let me give you a little idea of what support and resistance areas are. We might have heard about them. We might even have used them. But here is exactly why it is crucial to have them in. Okay, so we all have heard about Formula One racers, right? We know Formula One. I don't care if you like it, don't like it. That's not the point. The point is we've heard of it. We also know that it's pretty risky sport, right? And it's actually known amongst the drivers, especially the racers, that each season 25% will either have an accident or a fatality, right? So do you think when they get to their car and about to go in a race that they're going to just jump in, press and accelerate and go? Absolutely not. They put on their helmet. They put on their fireproof uniform. They buckle up, right? They don't have a mental seatbelt. They have a real seatbelt because they know the importance of it. Yet traders, they put in these mental stops. They have these mental support and resistance areas. It's literally like saying, oh, I'm going to put on a mental seatbelt on my child. And if we get into an accident, I'll be able to save them with my arm. I mean, it's a ludicrous idea, right? Yet 95% of people that want to trade fail because they do not put any safety measures on. And to me, the support and resistance area, that is exactly what they are. They are your safety measures. So you need to be able to draw these in. Like I said before, every good platform out there has drawing tools. You cannot do this as a mental drawing tool. You need to really draw them in. It doesn't have to be a rectangle. It could be as easy as just a straight line. Because when you're in the live market and you're looking to the left and your adrenaline is pumping hard because you're in a live trade, you don't want to be guessing why you entered that. You want to have it all drawn in. And that will distinguish you between the 95% that fail and the 5% that actually do well, right? So what exactly is a resistance area? It is literally the ceiling of the market. It is where the market is hitting 4 or 5 or more times over and over and over again. It is a powerful area where the market could either stay there, transition, or break out eventually. But you need to be completely aware of it and you have to have it completely drawn in because the market revisits areas. And if you don't have this drawn in and you're putting in a trade and it's getting stopped out, well, all you need to do is draw this in and you'll see why that happens. Okay, this is that resistance area, support area, the floor of the market. This is the floor of the market. Okay, so it's literally the same as a resistance, only mirror image. It's where the downtrend comes to a stop. And it could either come to a stop and transition altogether, or it could go and change that, or it could break out and continue on. But if you don't have this drawn in, you can very well be stopped out over and over and over again, right? This is a support area. So you have to have your areas drawn in because they are also what will help you really see the channeling market. Now, look at this channeling market. Do you really want to be in this ugly behavior where it goes back and forth, back and forth? I used to bring food for Keanu. Sorry, I just have to say something. Food for Keanu. Okay, so you are in this area, back and forth, back and forth. This is really, really important to have your resistance and support areas drawn in. Okay, you have to have these areas drawn in. Okay, guys. Get back in. Okay, so what are reversal areas? This is, to me, literally the trader's map to shift in direction and trend. What is the most important part about this is that these are the telltale signs. This is the beginning of those areas. So what are reversal areas? What are they? They're the double tops, the triple tops, double bottoms, triple bottoms, head and shoulders, right? These are the areas that are telling you that there is going to be a shift in direction or a complete stop. It is not telling you, oh, wait, reversal pattern, I'm going the opposite direction. Absolutely not. It is an indication of very strong potential, but it is not an end all do all. You have to wait for that confirmation to happen. So here it starts off as a double top, it leads into a triple top, which now is giving me a resistance area. So I understand that something's already happening and I'm already staying back. I also personally love divergences. Divergences to me are the king of everything. So I use MACDs. You can see what a divergence is. So here is my price action when it's going up, right? Yet my MACDs are already inclining down. What does that mean? It is showing me that there is weakness in the market, that the strength of that trend is dying. You don't ever want to be in the trend that is dying, right? You want to be in the most strongest part of it. Okay, so you want to stay out altogether. Okay, guys, so here is a double bottom with divergence. Look at this, beautiful, perfect double bottom. Boom, you have this massive divergence. Okay, so I want to now put this all together so that we can actually understand what is happening with the market. So again, everything that I just went through, the entire presentation, you can get here at makingofadaytrader.com. Makingofadaytrader.com. All right, so let's talk about breaking out of areas. Breaking out of areas is so important to understand. Why? Because the breakout is one of the most powerful trades out there, right? It is one of the most powerful trades that you can have. Yet, if you don't know how and where to spot it, you're going to miss out on the breakout, right? So for instance, here, you have a really strong resistance area, right? We don't know what's going to happen, but then boom, it breaks out. So I want to explain to you how it works. A breakout is when you're moving in one direction, then you have a massive area, a massive stop, and it breaks out and continues moving in the same direction. That is a breakout when you are going in one direction, the trend, and then you have a massive slowdown and in uncertain area, that indecisiveness, right? And then boom, it breaks out. That is that transition area, that powerful breakout area that you continue for. It's pretty much like a new trend, but in the same direction, right? Like you want to be in that particular setup. So this is how I take my trades, right? So here is that massive resistance area. There's a massive movement in my MACDs. Look at this. This zero line, this is that flat line, right? As you can see here, anything between here, that's that weakness, that super slow area, right? Then it breaks out right here, no divergence. And I put in all of my trades from the actual EMA lines. So just like an archer, you know how archer, with people for archery, they stand at a very particular spot and then they take out their bow and arrow and they shoot their arrow from that spot. You cannot just enter the market with a long bar, right? What does that mean? That long bar could come to an end. You have to have a very significant strategy. My strategy is once that breakout happens, once I have that massive movement on my MACDs and it comes back to my EMA line, this is my line in the sand, that's where I'm telling the market to fill me. I never ever enter at a market. I never enter at a market order. You need to put in a limit order. You need to tell exactly where you want to be entered. And here it will fill you. And if it doesn't, I don't go for it anymore. Emotional trading will always make you lose. So you never want to be in that part. Now, I want to talk about another bonus setup. It's called the initial reaction trade setup. And this is what it looks like. It is when the transition, when this consolidation actually changes direction. Because again, you want to be in as early as possible on a new trend. It's kind of like, think of it like this. You want to go jogging and you just put on your jogging clothes, your jogging shoes, and you run out the door. So if me and somebody else was, betting on where, if you're going to go the longest, that is when I would do it, right? It's right when you're out the door because I know that's when you have the most amount of energy. So it's the exact same thing with a trend, right? Boom. And look at this movement. Look at this MACDs. This is what it is. And like I said, I use my EMA lines for my entry points. Okay, so that is that initial reaction here. I want to share with you guys my charts so that you guys could kind of understand what is going on. Okay, so here are my charts. Today, it's been a completely crazy day. And look at this interesting thing right here. You can see right here, there was a massive, massive resistance area. And look at this. It revisited here. So if I was to be trading right here in this time, boom, I would be stopped out several times. So I would be waiting it out. I would be waiting to see what happens. And now it broke through. So now I would be watching it for a breakout trade because now I'm seeing that the MACDs are growing high. Here is my EMA line. This is where I would be entering. However, the market is about to close, right? So this is also amateur hour when the majority of traders are closing out their trades because, well, not even traders, a majority of people, because this is when they're kind of licking their wounds, taking their losses because it's right about to end, right? But as you can see, the consensus has been really good today. It's been flowing, moving upward in this direction. But again, if I was around here and I saw this resistance area, I would not be entering. I would be really, really concerned because I want to wear my seatbelt. I want to be protecting myself from this kind of a movement. Okay? So this is really important for you guys to see how to use this. Now, like I said before, every single trading platform has drawing tools. It could be, mine has a little bit more extensive, but others have even just the basics, even have a line or a rectangle, whatever, but you definitely need these areas. All right, guys, so we have pretty much everything that we need to take action, right? We have all these YouTube videos, like I was mentioning before, we watch all these different YouTube videos, all these different summits, these presentations, reading all these books. But the reality is, how do you know you're doing it right? Who is there to help you, to really guide you and say, hey, you know what? Is that indicator really working for you? Is that really that support area? Are you sure that is a good plan? What is your strategy? Somebody that you could talk with. How do you know you're doing it right? Right? So imagine if we could actually do this together every single week. Today, I have a very special offer for participants only, for people only that are here right now on this presentation. So if you guys are making a coffee or a sandwich or whatever, come back. I want you guys to just hear me out for the next few minutes. Come back right here, right now, few minutes. I promise you it will definitely be worth your while. So here is the thing. Let me break it down for you. What I'm offering is I have a weekly live trade chat room. Every week I go live. It's just me. It is not some moderator, not some hired person that goes and gives you live blah, blah, blah. No, we sit there together, implement everything that we are learning, taking live trades in the live trade chat room. This is a weekly thing that we do together. But the best thing of all, and this is value right here, $5,000, is unlimited one-on-one mentoring and coaching. I am offering you unlimited one-on-one feedback that you have me, unlimited, all you need. And on top of that, you will get my entire curriculum, and that you have unlimited access to this curriculum with quick, short videos that go over everything that we just went over and 10 times more, so that you know every simple step and can really, really apply it all. Now, I have traders, students from all over the world, because that's the coolest thing of all, right, about trading, is that you could do it from anywhere in the world. And here's what some of my students have said. Marina is right. Start today. I wish I found Marina sooner. I was struggling for years. You have great support here that you will get nowhere else. This is a great course. Zero experience in this area and non-techie, stay-at-home mom, and I'm totally catching on. The lessons are super helpful for my trading journey. Now, here is everything that you guys, only you guys are going to get. Total value of everything. The live trade weekly chat room. Unlimited one-on-one mentorship and coaching, unlimited curriculum access, and everything to trial out is $24.99 to get started. That's right, $24.99 to get started. Okay, go here right now, daytradingoffer.com. Go to daytradingoffer.com, and again, $24.99 to get started. Everything that I just said. The thing is that I could only offer this for 25 people, because I only have enough spots for 25 people due to my one-on-one mentorship, so that you can get my full attention. Daytradingoffer.com. Daytradingoffer.com. Okay, only for you guys, nobody else. It's a trial membership. You'll get 2 weeks for this price, $24.99. daytradingoffer.com. So when you go to daytradingoffer.com right here, you will be taken to this order form. So the first 2 weeks trial, and you can stop whenever you want, it's $24.99. Then it will become $49.99 per month. And again, that includes everything, my unlimited mentorship, the live trade chat room, $49.99 after that. But you start at $24.99, and it is at daytradingoffer.com. But remember, one-on-one mentorship is only available to 25 students who take me up on this right now. Otherwise, I cannot offer my full attention. So the spots are limited, okay? $24.99, daytradingoffer.com. So go here right now, guys, daytradingoffer.com. Oops, hang on just a second. Okay, so again, this is everything that you will be getting is right here. Live trade chat room, unlimited one-on-one mentorship and coaching, unlimited curriculum access. All of this is offered $24.99 to get started. $24.99 to get started. And like I said, you go here, you put in daytradingoffer.com, and it will take you to this order form right here. And you get started at $24.99 for 2 weeks. After that, you could totally stop whenever you want. There's zero obligation, no questions asked. $24.99 at daytradingoffer.com. All right, guys, I hope to see you in there, and let me know if there's any questions at all. I'm here to let you know and help you. Thank you so much for being here, and thank you again for having me on the show, Sherry. It's always such a pleasure. Thank you so much.
It is a pleasure. I appreciate you very much and hanging around waiting for us to catch up to ourselves. And I put the link into the chat for everybody. So if you're done 5 minutes early, what's that all about?
I said all that I had to say.
Okay, well, sometimes that's the way it works, doesn't it?
Yeah.
All right, well, everybody needs to go ahead and check out these offers. We will have a replay posted. GoToWebinar keeps it on their servers for a little while, then we download it and move it around. It'll be up at tradersexclusive.com/archived_webinars. If anybody, okay, our next webinar is going to be April 20th. I don't have enough people signed up for April 6th, so we're going to take a little bit of time to work up some more speakers. So April 20th will be our next time that we're here. And again, thank you so much for being with us, Marina. All right, guys, that's
Thank
all
you,
we have for
everybody.
today.
Thank you, everybody.
Thank
Bye.
you. So I have to say thank you so much to all of our presenters. And I want to thank you guys for joining us and staying through to the end. And like I say, our next webinar, our live event will be April 20th, not April 6th. You can go to tradersexclusive.com, check out everything we've got there. Twitter.com/options_info. See the options is capitalized and so is info. So I want to thank you all for being with us. Much appreciation for you all attending. This is Sherry and all of us at Traders Exclusive saying join us next time and trade well.